Okay, let's call ourselves to order. Joint meeting of the Board of Selectmen and the FinCom. It's a pleasure to have people from the Division of Local Services to present our plan for our community compact initiative related to financial management of the town. And so I thought probably there's a lot of stuff to cover here, and maybe if you could talk, I would say, why don't you talk to us for maybe a half an hour about you think of the most, I don't think we can go through every single page, but the most salient points that you think should be addressed in the town. Do you have any way of doing that, or? Yeah.
So, yeah, I just also wanted to thank you for all the work you did. I know it was a lot of work. I know you work off a template, obviously, but there's a lot of information that you looked at. So.
And it's very specific. It's not.
Right.
It's not boilerplate. So I can appreciate the amount of work too. It's really good.
So I think you just answered the next question I was going to ask. So the forecasting tool, that's that? Okay.
I'm teasing you with that right now.
Okay.
That's fine. So in terms, I don't know what you've done. So in other towns, what's worked well, but just offering a suggestion, if we use the table of contents, and there might be a section that everyone is good with and needs no discussion, or there might be something, I have a feeling there's a couple of them, like capital planning or financial reserves, that probably everybody wants to talk about. So what if we just take it, what's worked with other places?
What have you done before?
I mean, I would suggest taking it like section by section and either talk or just.
But we could get bogged down. That's what we want to.
Well, but we also want to review there's a lot of content. So what's worked?
Well, first I want to say thank you for having us in here tonight. I'm Marcia Bohank. I met.
Let's introduce everybody. Yes, we should.
Hi, I'm Nathan Kelly from the FinCom.
Okay.
Forbes Dury, FinCom.
Brad Bodwin, also from FinCom.
Okay.
I'm Jessica Kniezek from the FinCom.
Okay, so you're a new FinCom member.
Yep.
Jessica?
Mm-hmm.
Okay.
Dave Archibald.
Dave.
Joe Anderson.
Joe.
Gary Roberts, FinCom.
Angus Jennings, Town Manager.
And I'm Theo Kalivas from the Division of Local Services.
Just a little bit more background for people that don't know. The Community Compact Cabinet was one of Governor Baker's very, very first executive orders back in January 2015, where he and the Lieutenant Governor wanted to promote best practices for communities. They wanted to engage with as many communities as possible in several different areas. In May of this year, they signed the 350 and 351st Community Compact. So they have, every community in the state has joined the Community Compact in some way. So West Newbury has two of them, the policies, which we're here to talk about tonight, and the forecast document, which I will leave behind tonight, and then I'm sure we will be back to talk about the forecast, because that's a little bit more complicated. On the policies.
Wow, more complicated than the policies?
Yes, yes. The policies, we developed them and David, you are correct. We looked at the Division of Local Services best practices, the experience that we've gained working in different communities and different areas to come up with how we feel things should work. We also looked at the GFOA, the Government Finance Officers Association best practices. But more importantly, we looked at what West Newbury had. There were several policy statements that we received when we first met a bunch of months ago. And the preface in this document, if it looks familiar, those were your stated goals and objectives for policy. So we don't take something off the shelf. We do tailor it for the community when we develop it. We also look at what the independent auditors look at, things that they find in different communities, make sure we address those. And probably more important, what the rating agencies look at, because it's everybody's goal to be a AAA community, and once you hit that milestone, to maintain that. So going into the policy document, we're very happy to go through. We'll talk as long as you want and as much as you want, but it's very important to understand that what we gave you was more of a framework for West Newbury. It's not the DOR mandate of this is how you shall do it, but adopt it how it's going to work for you. I was up here. Oh, I'm sorry.
It's a starting point, really. You could think of it as for sort of a kit for communities that want to get something comprehensive. They can start with what we give them, and as their priorities change, as they believe that what's in the policies may not as accurately reflect their priorities, it's your document. It's there for you it's there to serve you.
Okay, so that all being said, let's jump right on in. And I'll let you, do you want to ask questions, or do you want me to us to present the document, or?
Maybe we could just,
I would do a section of that. The introduction that you have recommendations in there. I thought maybe as we hit that particular section, we could talk, if we need to, talk about any of those recommendations.
Oh, okay.
At that.
Sure.
I mean, if there's OPEB articles you're recommending when we're in OPEB, whatever.
Okay, absolutely.
so I would say, did anyone, I know that the FinCom did have some questions about paragraph 1, about anti-fraud, so.
Section 1 or paragraph?
Section 1, I meant to say, yeah.
So, I mean, I had a comment too. So I think it's the same comment that somebody else had. So not that it would be Angus, I wouldn't dream of that, but if in the event that he's not here someday and the town manager's suspected of fraud, where would you lean next? I mean, personally, I would say the Board of Selectmen or their designee to assume the primary role for investigating. Do you have?
Absolutely, it would elevate it up. And if that's, hold on.
I didn't see that.
Primary
No,
responsibility.
that wasn't there.
It's on page 2, section B, the third paragraph of that, and it suggests that the town manager has the primary responsibility for investigating all activity defined in the policy. So if the town manager is the one who is committing the fraud reviews, he would then be investigating himself, which is the
Right.
problem. Exactly.
Right, so we just add a sentence to that.
Add a sentence here, absolutely.
Okay. Anything else on the anti-fraud?
I had a question on this same paragraph on how this would play out, kind of given the constraints of the open meeting law, and specifically the obligation to make it known to an employee that they will be talked about 48 hours prior to a meeting, and it's the employee's option whether that's an open or closed session. So the way it's written, town manager will notify the Board of Selectmen to the extent practical of reported allegations of fraudulent or irregular contact upon and commencing the investigation. So as that would play out, if I became, or whomever sits in this chair at some point becomes concerned that there's a potential issue, is there a concern about, in bringing that to the board, it triggers an obligation to let the employee know that they are being looked at? And does that potentially compromise the ability? One of two things: it could either compromise the ability to go forward with an investigation, or potentially create an issue when an investigation may yield that there is, in fact, nothing wrong. So I just don't know if you've seen that come up in terms of how that interacts with open meeting law.
To my knowledge, I don't know, Theo, if it's come up with any of your communities. That has not come up, but that's a very good point. Let me take that back, and I can actually talk to one of our attorneys on staff and ask that question.
Yeah, I'd be interested in that, because I was going to ask the opposite point of view, because it says to the extent practical.
Well,
Yep.
what does that mean? All right, let me,
Yeah, why is that there?
all right, let me go back and,
But both good
That's,
questions.
that's a good point. What does that mean?
okay. I'm happy to do a little bit more research
Okay.
and
That's-
certainly add the sentences, as you said, just
Yeah,
if
definitely.
it is
that sentence.
if it is the town manager who is perhaps doing something fraudulent.
Right.
And actually, we had skipped this, but one of the questions that Chairman Kemper had come up with that when we met today was going back to page 2 of the introduction. It refers to establishing a capital stabilization fund, although,
We're gonna get to
We're gonna
that,
talk
yeah.
about when we do that section.
Okay,
about-
okay,
Because
all
there's
right.
a bunch of things,
Okay.
so as
Sure.
opposed to talking about it twice.
yep.
Okay.
Which is actually coming up next.
Capital planning, right. I think one thing that's probably on most of our minds, can you explain the difference and the need to have well, actually 3, a general stabilization fund, a capital stabilization fund, and you reference on page 21, a cash capital budget? I mean, the reason I ask is we're a small town, so having all of these stabilization funds will inflate the amount of money that we have in reserves across all these funds. I mean, personally, I'd rather focus on having the appropriate funding in one fund, but maybe there's a good reason, I don't know.
Well,
Versus creating new
Yeah,
ones.
tell us what the general reserve, what's the purpose of that?
Well, the general reserve is specifically for some emergency, a weather event. Poor Lynn just had a flood and Webster just had a tornado. To have reserves put away for true emergencies or
Sudden loss of revenue for whatever reason from the state level, from other.
I mean, if we have a flood like Webster, I don't think we're gonna have enough money in any reserve fund.
But that would get you to a degree, and that's what communities have their general stabilization for. A capital stabilization is generally works with the capital plan because there's certain capital items that you pay for cash with. A police car, you wouldn't want to finance a police car, or some equipment, DPW equipment, lawnmowers or some smaller fire gear, fire hoses that would be a cash purchase for capital. But right now you're using free cash, and that's been working very well for you because you have been very fortunate to have high levels of free cash. The reason to have the capital stabilization fund, though, is because free cash expires at the end of the fiscal year. Now, one of the reasons why West Newbury's had so much free cash is you're leaving approximately 50% of the certified free cash on the table, so it becomes the base for the following year. Instead of leaving that as the base, put that into your capital stabilization to fund your capital plan. That way, there's an accident with a police car and you have to immediately replace it. Well, the funding is there. It helps mitigate some debt service, as you are doing with your school stabilization fund for future school projects and school building, to mitigate the tax burden on that. That's how the capital stabilization is used. Now, certainly, as you just said, that a small town, do you really need multiple stabilization funds? A general stabilization fund can be used for any lawful purpose, just with the 2/3 vote at town meeting. So it's not an issue to put your capital into your general stabilization fund. Communities just like the more transparency and keeping the buckets separated.
And, you know, it's just sort of a refined framework for your capital planning for the future, where you're not having a lot of ins and outs in your general stabilization fund. You're leaving it there for that rainy day, for that emergency. Whereas with your capital stabilization fund, you can be secure that that balance you're going to put towards some capital purpose, and you can appropriate into it ahead of time, looking toward the future, and say, you know, that balance will be for capital, and we know our stabilization fund balance will be for emergencies.
What's the cash capital budget that you reference on page 21?
Those would be your cash purchases for
So-
equipment.
Like what we're,
It's like what you are currently doing in your town meeting, you know, appropriating free cash for.
we're a little all over the map because we do have a stabilization fund with
A
lot.
capital one.
Well, it's described as a capital one based on what Marcia said.
Right.
But we term it a general stabilization fund, I believe.
It's just the name
It's
we give
a
it, but it's for capital
It is for
purposes.
capital.
Strictly.
Okay, all right. Well, then I did not understand that. I was thinking.
But it's just that what the town of West Newbury calls it, they call it general stabilization as opposed to a school stabilization. It's sort of general, but general in the sense that it's
Well,
fire trucks and whatever.
But the primary purpose is
It wouldn't be
capital.
for paying any salaries or anything. It's not an operating.
yeah, we don't even use that word. We just use the word stabilization.
Right.
But if there were to be an emergency where monies were needed, they would come out of that same stabilization fund.
It would depend what emergency, how much. I mean, we've got a ton of free cash right now, which, you know, obviously we need to change that, but.
No, but I don't, if there was an emergency where we, I don't know, had to hire, new police officers, I don't think we could, in our present situation, I don't know how that would happen, but in our present situation, we couldn't use our stabilization account to do that. It's not general purpose. It's only for capital items, and it's only vetted through the capital improvements committee. So that's,
Okay.
so you may have got our naming of it may have confused you, yes.
Yes, I apologize. I
That's kind of,
Did
when I
not-
read it, I thought you probably got that mixed up. Yeah.
I did.
But it's not a big deal, okay.
Okay.
What were Glenn's comments?
It's actually the same idea. He had another comment in this section, though, which I'll jump to. So this is on page 5 on the evaluation of capital projects. Glenn and I have both flagged for those 10 items that if something like this is adopted, there ought to be some guidance in terms of the relative importance or weight of the different factors.
Well, the capital improvements committee does have, I mean, very similar to this, I don't know how many point scoring. Brad, do you remember how many of these, there's similar things to this, right?
The litmus test of it
Yeah.
is I think 25 items, like 100 points each. So there's a
Yes.
litmus test that is used.
Yes, and actually, I boiled them down
Oh,
to
you
these
got that
10
from us.
categories. So
Okay,
this,
so
yes,
we-
this
okay.
actually came from you.
Okay.
And I didn't list out all 24, 25 of them, but kind of categorized them in these 10 topics. So this is your criteria.
Yes.
So, okay, can we talk about, also, can I jump to like the process of how this works? Because on page 22, it stated to provide a capital improvement plan, capital improvement committee plan, developing the following year's budget. The previous finance directors presented their initial budget to the Selectmen and the Finance Committee in January, so receiving a capital plan 6 weeks prior to town meeting is extremely late, and there's not much, I mean, the budgeting is already done. We actually have a previously adopted policy of the Selectmen that says Each year, the town manager shall submit a 5-year capital plan to the selectmen by the end of October. The plan shall include both cost estimates and fundings, maybe not this year, I just don't matter. Funding sources, the current capital plan needs to be updated, blah, 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 blah. So just because you reflected our bylaw in here, and what the Capital Improvements Committee, I mean, I was on it for a couple of years. I haven't been on it in a few, but from my vantage point, they take this year's projects and and vet them, interview the department heads, whoever, discuss them, and then rank them based on the 25 criteria. It's not, so the plan itself comes from, previously it was the finance director that did it, because that is, and I know you know this, so this is more for, more for everyone else. I mean, that's a lot of work to put a capital plan together. I mean, you have to gather it, you have to understand the cost, I mean, doing a costing of a plan, I mean, that's huge. And then prioritizing it, I mean, I think that's beyond the scope of a volunteer committee. That's just my opinion.
If I'm correct, that's the biggest thing I noticed was different on this plan is it says that
Can you
something
speak into a microphone?
I guess that was the biggest comment I had is, let me see if I can find the note here. But it seems like in this report, they're recommending the town accountant be the one that generates this stabilization chart, so the plan of how much things are gonna cost. Because as it is right now, the committee doesn't, so it's like I said, when I was on the capital improvement committee, the committee is one who made that stabilization chart and updated it and maintained it.
I think it came from the finance director.
I didn't see the finance director at our capital improvement committee meetings where we made the chart.
Okay, well, I'm maybe going back a year or two before you were there.
But I just noticed the same comment where like it seemed like for a volunteer committee, it's like there's just definitely a lot of future forecasting for the town, and not that it's a bad thing, but
yeah, it's impossible for the committee to work with. I mean, unless you're going to be here every other week. To work with the department heads and to create a plan. I mean,
that's what I'm saying. I think it makes
so
more sense as I agree with the plan. Because that's how it was. Because it was volunteers trying to do it when they're at work, but probably an employee that's going to be in the town hall during business hours makes more sense.
So I would make a recommendation to the group. How does this sound? In paragraph 2 of the policy, instead of saying page 4, sorry. Thank you, Archie. Paragraph 2 of policy. Instead of saying the capital improvement committee is, say the town manager, comma, in consultation with department heads and the capital improvement committee is charged to oversee West Newbury's capital plan, blah, blah, blah. And then move the last sentence up and say, their objectives are to identify blah, blah, blah. And then go back, and instead of saying its membership, say the CIC membership includes. So just to kind of edit that to reflect that the town manager owns the development of the plan, and then the CIC can vet the plan. I mean, does that make sense? Or
because like I said, I think even as it stands, I think the owner of the stabilization table, it's the chairman of the capital improvement committee. We've definitely had years in the past where like their computer broke, so we lost the table. You know, and it's just a bunch of work to try to do the whole table again. So I think definitely having it in the town's control and management, it makes sense.
Absolutely, and yeah.
Okay.
No further.
And that's fine. Obviously, that's the way you want to do it. Just double check your bylaws.
we have this would require a bylaw revision.
Okay. All right.
I was going to get to that.
Oh, I'm sorry.
Skipped ahead. So we'd also have to edit in C, say only projects that have gone through CIC's review process. So it should say through the review process described in the policy paragraphs. And then when you get down to D, the same language again, instead of saying the CIC, say the town manager in consultation with department heads and the CIC will develop a 6-year plan. And I would insert there to be consistent with the already adopted policy of the board, say by September 1st of each year, except for this year. And at least 6 weeks prior to annual test. So we'll have to revise the bylaw. So
Do we like 6?
Well, I think that's
Time frame or?
oh, that's for the capital to us. Actually, that's late too. I mean, I'd rather have it like the vetting of the current year plan by the CIC, like I'd say, I don't know.
No, I meant 6 years is
Oh,
what I
6
mean.
years. I thought you meant 6 weeks. Sorry.
I was gonna say, I'd probably also recommend we'd already do a 10-year plan. And even then, we find most items, if they constitute a capital improvement, a lot of them have a shelf life of over 10 years. And so it's just tough. Even at 10 years, sometimes it's hard to get everything on there again before you're gonna replace it. So, but like you said, I think that's just a starting point with the 6, but probably a little bit more wouldn't hurt.
No, I mean, Brad, I agree with 10 myself.
And then, sorry, I just wanted a point of clarification.
Yeah.
Is the thought that we're going to try to maintain our stabilization account as it is, we're combining a general stabilization and a capital stabilization, or do we? Because if we don't think we're going to separate the two, I wonder if we want to revise the numbers to reflect the combination of both those functions with our single account.
I think we need to talk about it. If we're gonna.
I think we could talk a long time.
Yeah,
about
we
that.
need to talk about that. Maybe it's a different day. I don't know. I'd like to include all 3 selectmen.
Okay.
So I have a question though, on page 6, the first on the top. It says annually the town will strive to have minimum. Why not an actual number of what's needed to fund the projects versus like just a percentage?
Like 1 year might be 10 or 12, and the next year might be 3, depending upon the need of the, we buy a fire engine, that's a big percent of our budget, yes.
Right. The purpose behind that statement is so that there's an ongoing capital maintenance program, that you're not going 0, 0, 0, and all of a sudden then you need the fire truck and you're spending a lot of money, but to level it out. So if the capital committee with the town manager gets all of these requests, that there's a target.
Yeah, I mean.
That's always been our ideal anyway.
Right,
yeah.
and it's not, certainly you can make that sentence say whatever you want, but it's strive to maintain a target range. That doesn't mean you can't exceed it if it's required, or you might want to give it a break for a year and not do anything. But on average, that's what you're trying to maintain. And we've found, again, this goes back to the best practices and things that we've experienced, that 3 to 5 range keeps communities on an even keel.
What if we said to fully fund our capital projects a minimum of 3 years, that's a minimum of 5 years, so we're always have 100% funding for, with a 10-year plan, and hopefully we'll have the whole thing funded, but at least a minimum of 5 years, because we would have to do what you just said in order to do that.
Okay, so
Okay,
5 years would be 5% of, say, 13 million would be 650,000 times 5 would be 4.5 million in the capital city.
I don't mean that.
No, you're saying a full year for 5 years, all funded.
I'm saying to have it funded. So like, that table we were looking at? So I'm saying in year 5, there's no deficits.
Mm-hmm.
So what's a better way to say that?
Well, I think over the course of that 5 years, with the additional money that's going in every year, you always have the cash on hand to buy what you need to buy. So if there's a fire truck in year 8 and you're putting away $100,000 a year for 8 years, in the 8th year you have the money. But I think what you had said was that there would be 5 years of fully capitalized capital plan.
That's a lot.
On day
Well,
one,
okay,
which
what
I
I
think
meant-
is a lot.
So what I meant to say is that we don't have a negative in years 1 through 5. So if the money you put in, the money you spend, so that it's not negative. So that we have enough to fund everything. It's not. I didn't say it right.
And I think really the intent of the policy is to make sure that you're in a state of continuing to examine and monitor the balance of the account and compare it against your needs, and making sure if it starts to dip too low, you're taking whatever action you deem appropriate to get it to where it needs to be to fund your priorities.
Okay.
And the other thing that some communities get in trouble is they don't dedicate resources to capital, and then all of a sudden they have great capital and infrastructure needs, and they can't claw it back from the budget. So, as Theo just said, to continually monitoring that and planning ahead.
Okay. Anything else on capital planning?
There was, Glenn had another, two comments on capital planning. One is that section F, that the town accountant or treasurer would do one of the following. And the basic question is, under what authority would those positions be able to, for example, if there's funds remaining once the project is closed out, to transfer that to another capital project? And Glenn raised the concern of, when you present to voters to allocate the money for that purpose, under what authority could it, some years later, be put to a different purpose? And he was, I think, rightfully concerned that that could tie into concerns that have come up at town meeting.
That'll be closed out.
Right.
Yeah.
Do you
Okay,
follow?
so,
Is that
not
bullet
exactly.
point 1 there? Is that the one?
Well, it's the whole section F.
Well, those thresholds are by statute. And actually, before the Municipal Modernization Act was signed in November of 16. Wow, it's a long time ago already. Those thresholds were much, much smaller. So the 50,000 was put in to give communities some flexibility. So if the project, I'm going to the second bullet first, if it was bond funded, so you borrowed for a project, generally what we like to see is when the project is complete, you borrow the money. At that point, you get what you need, but some communities will borrow ahead and not need all of the bond proceeds. If those, the selectmen have the authority to say where that money is going to be reallocated.
I don't want that authority.
Well, it's by law, you've got it. And so what this is simply saying is that the treasurer and the accountant will look at the accounts to see what's ongoing. You have some money, it has to go someplace, it can't just sit there. It's up to the selectmen to make that decision.
I don't know if that's the statute. I mean, I agree with Glenn, but if that's the statute, I mean, I understand what he's saying.
If it's greater than $50,000, it has to go to another capital project for which the town can borrow. So that way you're not wasting bond proceeds, basically. Not that you waste them.
The idea is to not waste bond proceeds. Oh,
right.
Okay.
And then if it was funded through the levy or free cash or your capital stabilization, it can be reallocated to another purpose, another capital purpose, or if it was from your capital stabilization, you can vote to put the remaining money back into the capital stabilization. And that's something I have to say, a little off topic, but your town meeting warrant is one of my favorite town meeting warrants that I've seen, that how you lay it out with the funding source and the sunset clause right in there. That's not very many people do that, and that's excellent.
Finance committee drove that.
That's, kudos to them for that. So, that first bullet point, you're taking care of on the way in, so.
Okay. So we're good with that?
With that, yes. Glenn had one other comment, which actually comes up in a number of places, but I think this might be the first, which is the final bullet under letter F on page 6, which is, to the fullest extent feasible, all capital projects associated with the town's water enterprise fund shall be financed from user fees. And he just wanted to acknowledge that is a policy decision, that at some point the town could go in a different direction in terms of offering a greater subsidy of the water. Whether it does or doesn't, I'm not going to guess, but it's something that he said that if the language, and I agree with him, by the way, if the language throughout here suggests that is really only a last resort type of thing, there may come a time that the town has a valid public policy reason to provide more general tax revenue toward the water.
I had a little qualm about that too, yeah.
Well, and that's why the word feasible is something that you could define. You know, certainly if a large water infrastructure project that the ratepayers just could not absorb, it would not be feasible for the water department to take on that debt and
Does the
that
word
issue.
feasible?
I think in this case, it's feasible. There might be others later where it's a little stronger. So.
Okay, all right.
Okay. Anything else?
Good comment, yeah.
Okay, so what's next? Debt?
Glenn had a related comment on debt under A2, where in this case it says, use available funds to the greatest extent possible to reduce the amount of borrowing on all debt finance projects. And he and I both read that to mean, greatest possible basically means you got to draw down your free cash to zero before you borrow anything. So I think that perhaps could be softened a bit.
Perhaps use available funds as feasible to reduce,
Or as practicable.
as practicable.
always
Let's
a good
use a different word.
Prudent.
So to the extent, what, practical?
Yeah.
As
Something to
practicable,
that,
use available funds as
Practicable.
practicable to reduce the amount of borrowing.
Okay. That's on debt, you were on?
Yep.
Okay. So anybody have comments on that?
Just at the top of the of 8. So, when it says there's a target balance, does that mean that it's a good idea to always have some debt? Is that
Yes, the rating agencies.
like a homeowner? If you don't use a credit card, you can never get a rating.
Exactly.
Same thing.
Same thing. Yes.
Okay.
And also, if you don't leave space for some debt, which usually is funding capital investment, eventually your operating budget is going to grow and crowd it out. So one day when you need to invest in capital, you might not have the capacity in the budget.
Okay.
Okay.
Well, the school project passes. We don't have an issue.
We'll have plenty of time.
Anything else on that? What's on F reporting says the town's debt schedule at least annually. I like specifics. So like at least annually when? Like when should that occur ideally?
Well, it's something that I need to provide to the auditor each year in terms of what the June 30 outstanding principal was. So if that timeline
So
works.
August, September, or something like that?
It's actually, you could figure it at any time.
Right.
You could figure it early in the year where you're gonna be June 30th, because you know where you'll stand.
So the reason I ask that is, you know, in 12 years when you're not here, or maybe it's 15, I don't know, I hope you are, but at least annually, like, that could never happen too. I mean, you have to provide it to the auditor, but I don't know. It's like vagueness could never happen.
Sure.
Okay.
Well, it just, the policy year-end closing towards the end of the document has a lot of September dates to coincide with the closing of the books.
Okay.
So we could put a September
30.
Yeah.
date in there.
Okay. And maybe I'm being too technical here, but on page 9 it says within 170 days of the end of the fiscal year. So isn't that like March 31st?
It's March 31st. That's what the statute says, and that's a requirement. That's an SEC requirement, and that's their language.
Okay, statute wording. Okay.
Yeah.
Okay.
I guess.
But your math is exactly correct. It is March 31st.
Actually, you know what we should do? By put in parentheses March, so people are gonna just like every time they see that they're gonna do the math. So like to save like 1 million people.
some brain power.
Well, yeah. Okay. Everybody good with that?
Yep.
Yeah.
Disbursements.
Make it easy where you can.
From our meeting last week, there are some updates for the disbursements.
Okay.
There's some duplicative processes here that my understanding is once Angus and the treasurer, collector, town accountant work on the payroll system a little bit more and use the payroll system the way it's designed, that it will free up some of the town accountants' extra work. And streamline it to the way it should be. This was one that kind of is convoluted, so it will get easier.
So is there?
And we'll clean it up.
Okay, so I assume you're gonna jump in with any feedback from.
Yeah, I've got notes from my meetings with department heads, and I'm kind of looking back and forth with those. But this was a section where I think of all and I think I've told both the board and the committee, we had a series of meetings with Marcia last week with affected department heads, went through this in detail. But yeah, there were some things about the process that once we use our payroll software to its fuller capacity will no longer be needed. There is some extra work reflected in here that if we properly use the software, will not need extra reports. So we are working on that.
Okay. So on responsibilities, and maybe this is a transition question, I don't know, but I think it's something we need to talk about. In our personnel bylaw, which is a town bylaw, so, and I realize a town bylaw can be changed. It said the board may adopt a compensation plan, blah, blah, blah. So that's where the authority rests currently.
Mm-hmm.
So we should change one of them. I'm not saying which one we should change, but they're in conflict.
Well, and one thing I can point out just from my prior experience is a personnel action form. I mean, that was essential in my old job. There was never a change to someone's rate of pay, to someone's classification, any of that without a person. So it's just a simple thing. Another thing that I noted is
just so past practice here. We have a salary matrix, which you may have seen already.
Yep.
So we vote that every June, and if there's a change, and this rarely happens, but if there's a change mid-year, then it would be voted and updated.
Mm-hmm.
So, whatever.
Okay.
Somewhere.
Rare, but when it happens.
Well, it happened this
A
year.
mid-year change, yeah.
Anything else?
that it would be useful to have a list of authorized signers, because there are a lot of people, not just on staff, but also committees and boards that are signing invoices. And that, that makes me a little bit concerned, just because different people may have different, and it's a timeliness issue. It's also a kind of standard of review issue.
Excellent idea.
So,
because like if a committee designates somebody to sign on their behalf, like who is that? And then it's the responsibility of the committee, if that changes, to notify the town accountant or you, or whoever.
Is there a monetary threshold where, if the amount's above $5,000 or $10,000 that the town manager or somebody should be looking at that beyond the committee?
Well, the town manager looks at every invoice anyway.
true.
The answer to that is there is no threshold, no.
Yeah, there's no, as long as it's within budget. So that's the threshold, the
Yeah.
budget. Should there be? I don't know.
Just wondering, if it's, if the big check.
He'll see it. He'll see it before it goes out.
Well, but
And the accountant will see it too. Yeah.
And they can.
right, there's 3 sets of eyes on every warrant before it goes out. But, there's the related question of contracting authority, because there's multiple entities that have executed contracts, in some cases 6-figure contracts, and because that's decentralized, again, it raises the question of, how much work does my office need to do just to stay up to date on what people are doing, as opposed to, in my old job, I was the only contracting authority. So there was not a contract that I was not aware of. Whereas here I have I kind of routinely become, we're working on getting the department heads to send all the contracts to the town accountant, which should have been happening all along, but that has not happened all along.
Interesting.
Yes. So, but I think as a starting point, having a list of authorized signers per section of
That's
the
an
budget
excellent-
is kind of a,
Absolutely. You guys have anything? So one thing on page 12, the very top, town manager. So the selectmen delegated our authority to approve warrants, which is, Mass General Law, through our special act. However, in that legislation, we also maintain our authority to approve warrants. So in this policy, it's stated that it's only the town manager, which is not true. So the statute says otherwise.
Okay. So are you both doing it, or
No,
if the town manager is not available?
In a practicality, he's doing 100% of it, but we just didn't give up the right to do that.
Okay.
If someday I want to go in and look at them, I have the right to do that.
Oh, okay. Well, I mean, that would be your right anyway. This policy does not preclude you from doing that.
Yeah, but this is, what I was saying was a little bit different. So I'm saying approving it. So as a board, or if the board delegates an individual, we could approve it if we wanted to. That's not our intent. Our intent is that the town manager does.
Okay.
But that's what the statute says.
Okay. So do you want to alter the policy statement to reflect?
I would make it consistent with the statute.
Yeah.
Okay.
I mean, it kind of has to be, because the statute's the higher authority anyway.
I agree, and I think that needs to be clarified anyway in kind of in real terms, because very often when the warrant gets to me, there's some number of invoices in there that are, if not past due, almost due. So I think I need to work with the board to figure out kind of operationally, how does that work?
Turn through them quicker.
We haven't got to that yet, but
No, I don't mean you. I
Right.
just mean the process.
Well, and
it's
that's a
usually
whole other-
delayed at the departmental level.
Yeah.
and which is partly a function of all of these signers. So,
Okay.
Okay.
but I think that because that is the statute, and because that's an open question of kind of the mechanics of how does that work. I mean, if I sign a warrant, but if the selectmen review the same warrant and say they wouldn't assign this one, what happens then?
What happens at
I mean,
that
that's a
point?
question I've had.
Okay.
That's a good question.
All right. Who ultimate authority?
I think we arm
goes?
wrestle.
Okay.
I've been working out just in case that's the answer.
All three of them at once.
We only need
You're gonna
one.
need
We
to grow a third
only
arm.
need one.
We
It's,
got-
it's
we
neither
got-
the two that are
We
here.
got more.
So, sorry. I mean,
Great.
it's new, so we're working through it.
Yeah,
I
oh,
mean,
no, absolutely. This was kind of an interesting challenge to create this document for you, knowing that the town manager was coming,
During
not
the
here
transition.
yet, and, assigning the responsibilities. So fully expected changes.
Okay. Employee reimbursement, did anybody have anything?
I had one, I just throw this out for.
Back on
discussion.
disbursements, I just want to flag that under the cash drawers, we had talked about the council on aging amount, that effectively serves as petty cash for that department. The question came up in last week's meeting regarding the amount in health and what the use is for that. I haven't had a chance to follow up with them on that question. It was also noted that police has some amount of petty cash.
So it says to mitigate the risk of illegal expenditures, violations of procurement laws, or instances of expenses exceeding appropriations, petty cash accounts are not authorized. So that seems to be in conflict.
So
Yes.
petty
Right.
cash and cash drawers are two different things, yeah.
Right, so when this was being developed, there was some inconsistencies in the information, and we were told that there was no petty cash, but there was change drawers, which in reality, it's just the opposite, that there is a petty cash being maintained by these departments. So these two, section C and D, will be modified. Again, best practices, we don't like to see petty cash, but small amounts, $50 generally for Council of Aging is in Board of Health. In my experience, Board of Health usually uses it for postage, run to the post office to send something certified. And it's nice to have that, and then it immediately goes through the warrant process. So we'll modify this to reflect that and add the police as a petty cash.
What's your
I'm open to suggestions for sure, and I would obviously want to talk with department heads and see, as a practical matter, how important it is. It's been part of the offices that I have been involved with, but
What about the inspection department? Do any contractors ever pay in cash?
Well, they would receive cash as
That's a
a
payment.
payment and
Right,
then be
but what if
turned
they
over.
need change?
Generally, that's handled out of the treasurer's office.
Okay.
Or if the inspector's office has, they don't turn it over daily. It would be nice to make sure everybody did that, but in a practical sense, there's usually a week's worth and they can make some change, and if not, the treasurer's always available.
Okay. Employee reimbursement.
Okay, I had one, just throwing it out, on page 15, under meals, is our $40 too low for a per diem?
Depends on where you are.
That's what I mean. Any thoughts?
That's,
That's a
and we
policy.
put that in brackets as a decision.
Right,
Yeah, we would say review usage, review your needs, and, you know, come to a decision in consultation with your staff and the town manager.
yeah.
What do you think? I had the actually same question in my head when I did my first review, but then when I went through it again, I crossed it off, but I was thinking the same thing.
I think for us, it's what, $9?
Travel for work.
Oh, yeah, maybe something like that.
Yeah, like $9 a
Over
day.
10 years ago, and I was getting $50 a day for my travel. It's covered 3 meals, but $50 was pretty standard back 10 years ago.
I would say at least 50, that's my thought.
Is there a policy that applies to state employees for travel? And if so, what is it?
Yes.
It's not $40.
It's like $9.
Yeah.
It's
Ah.
hopelessly out of date.
Sorry, I
It's
asked that.
very, very small.
Total
Yes.
or per meal?
I think lunch, no, I think lunch is like $4 and dinner
Breakfast might be
is,
$2.50 to $3,
yeah,
something like
dinner
that.
is like $7. It's ridiculously small. Like, you couldn't even do
I
McDonald's.
mean, also it's subject to collective bargaining as well for us, I believe.
So as a result, nobody travels overnight for work.
No, it's
Not often.
I wouldn't.
not often.
I
No,
worked-
travel is frowned upon.
I worked for FEMA 20 years ago, and it was 40 at that time. And I don't think, I think 50 would be reasonable. I mean, it's not generous, it's not overly generous, but I think it's reasonable because it doesn't cover alcohol. And so if you're, you know, $10 for breakfast, 15 for lunch, and you still got 25 for, you know, I think 50 is workable. I think 40, the employee is going to be.
That's kind of
probably
tough if you're.
It's not
if
easy.
You're doing 3 meals.
Yeah, it's not easy.
You're gonna have to have a cheap lunch, but
Yeah.
But I don't think 50 is overly generous.
No, I don't think 50 is. I think 40 is a little lean.
Break it down as a per meal thing, so if someone's gonna only have 1 meal, it's not per diem.
Yeah, but then you're restricting,
How often are employees traveling?
not that often.
Not very often, no.
So how much of an issue is it? So just change it to 50
Change it
and
to
move on.
50.
Okay.
Anything else?
Anybody else have any on that one? Okay, I had a question on 16, page 16. There's again a minor issue, but basically that somebody needs their expenses back in 30 days or no reimbursement. That seems a little tough. You might be waiting on a credit card statement or something, and I'd say 45 days.
I flagged that. I wouldn't even put it in, because if it's within the fiscal year and it's budgeted and it's an eligible expense, I mean, whatever the policy is, staff will adjust to it, but I think if there's a time limit, it ought to be, I would say, at least 60 days. But I did have employees at my old job who would put in twice a year for their reimbursement for 6 months at a time. It didn't bother me, but if it's an interest to have more of a per month, you know, true accounting of expenses, you would want some time limit in there. But I think 30 is
So
Too
how-
restrictive, yeah.
So how about if we just pull out that one part of the sentence that says no later than 30 days after the expenses being incurred? Or put out a maximum also, sorry.
That was what I had flagged.
Okay.
60?
No, nothing.
Oh, nothing, oh,
But if
Well,
you
then
just
it
remove
should
that sentence then reads as soon as it's been incurred.
Oh, okay, then just pull the whole thing.
well,
How about as soon
think-
as
I think
practical
modify it
after the
from
travel has concluded or the
60 or
expenses?
even 90 if you want to be lenient, but
Well, you know, it's to Angus's point, as long as it's budgeted for, if the employee wants to go out without their money for 6 months,
Well, then we should change that.
It has to
Comma
say
should
within the fiscal year.
Exactly. After the comma should indicate that it's within the fiscal year.
one of the reasons behind putting a date certain for the reimbursements is as time goes on, people forget, department heads forget that somebody traveled, where did they go, how long were they gone, was it actually a travel day? And if you wait 6 months,
I recognize.
slip something in and you open yourself up for fraud. You know, again, not that it's happening here, but that's the reasoning behind putting in that maximum date requirement or date requirement.
I feel like 60 is fair.
agreed.
That's my opinion.
I wouldn't be real concerned about 60.
I think it's,
I don't think it's a big issue.
you wouldn't be concerned about what?
About 60. I think that's workable.
Okay. I thought no one would care about that. Financial, everyone good on that? Okay.
No.
Oh, you're not?
Financial reserves?
No, the reimbursement.
Oh, yeah,
Moving on.
yes.
Okay, financial reserve, so, my comment was, I guess we've already discussed that, was the general composition of the general fund reserve, so, okay.
Okay. So just so I'm clear on it, the enabling statute or town meeting vote for your current stabilization fund was for capital
Yes,
only.
it's a capital.
It's just not called a capital.
Right.
It's called a stabilization fund, that's what it's called.
Okay.
It's not called a general or a capital, it's
It's
called a
just
stabilization
stabilization.
fund.
For the primary purpose or for the purpose of.
Sole purpose.
Sole purpose of
That's
capital.
all it has in it, is
All right.
capital items.
All right. So, no general. Is there, and there's, you don't feel that there's a need to have a general stabilization in case of emergencies?
No,
Or
I
it's-
think
just,
splitting the money too many ways?
we've had,
we have too much, our reserve level's too high in total.
I guess my only comment would be, what would be an emergency where we have to expend a lot of money, but it wouldn't be on some capital item that was affected in some way or another?
Snow and ice.
Weather?
That's not an emergency.
No, tornado, flood,
But
building
but-
burns down.
So a building, right? So a tornado is going to affect a building or a fire truck that tips over. So I guess that was only my comment is like, well, what would you be spending the money on? It'd probably be a capital item that was destroyed or needed repair. So again, I understand in theory the practice about the general, but it just seems like it's such a low probability anyway. And if it happened, it'd probably affect something that we're already budgeting for elsewhere.
Or
We have
or
a-
it would be way too much that we wouldn't have the money anyway and we'd have to
Right.
have a town meeting.
we do have a reserve fund that the finance committee controls, but it has fluctuated around 50, 60, 65,000. So that is for true emergencies, past a boiler in the school broke, and we have used it for emergencies like that, but never a huge item though.
But again, that would fall under the capital expenditure, so.
That's what I said. So I'm just trying to still understand what
Okay.
would that. I'm not second guessing it, but I'm just trying to
No.
understand what that would be.
Yeah, that's it. Communities use it for a variety of reasons, and I think that years ago there wasn't specific stabilization funds. Everything fell into the general, and then communities started adopting for specific purposes, and the general just kind of stayed. So, no, I certainly
I've been to other municipal meetings and so forth where certain communities, even smaller than ours, and they have a police truck with stabilization, and they have a water fountain stabilization. They have like 15 stabilizations. It seems hard to manage. That seems like you can go in the opposite direction and have too many of these things.
Absolutely. And then you after you satisfy the purpose, do you still have it? Do you have to close it? You go back to town meeting. Right. That does not make a lot of sense because, and you're splitting your money way too many ways. Having a capital stabilization, or as you're calling it, a stabilization fund to support your capital planning, all of those individual pieces are handled in the capital plan, and you're taking from your stabilization to fund it.
Okay, let me ask you this. You said a lot of this addresses how rating agencies evaluate the municipalities. So say, just pick a number. Say we've got 800,000 in free cash versus 300,000 in free cash and 500,000 in a general stabilization account. Would the rating agency like the latter better?
Absolutely.
Okay, well that's something to think about.
Absolutely, because again, free cash expires at the end of the year.
Well, it doesn't disappear, though.
It doesn't disappear, but there's no guarantee. The results of the subsequent fiscal year, you could have blown through your budget.
Okay.
Free cash, you started at 5 and you end up at 250. Whereas if you appropriate it at town meeting, put it in a stabilization fund, it's preserved for a reason. And that's what they're looking at.
So words matter in this case.
Words matter.
Okay.
The other thing I would say from the state level, when I was doing budgeting there, is when we used the stabilization fund was for the loss of revenue in the recession, and that's when you pulled from the stabilization fund, and that's where you'd have the restriction if it's for capital purposes only, that you wouldn't be able to do that.
Right. We certainly, as best practice, we do not like using reserves for ongoing expenses, one-time revenue, ongoing expenses. However, and especially on the state level, and back in 2008, several communities, and there are some communities that use free cash or stabilization each year to fund their budget.
Okay.
Not a good use,
that's
but
a
it
good
happens.
point. So that's the last time we had, kind of an emergency, you might say, it's 2008. So
It's a financial emergency.
we had to, some employees lost hours, and everybody didn't get raises the way they usually do and stuff. So would the general stabilization, would the DOR frown upon us using that to maintain the
Well, there's different ways you can.
the operating budget?
There's different ways you can do that. I mean, if we're funding the stabilization fund every year with $400,000, let's say, I don't know, whatever. I'm just
No,
talking.
but maybe
So-
it just sits there.
Well, okay, let me finish.
Okay.
So what we do is we just don't fund it that 1 year. That's using it's kind of doing what you just said, but not.
No, but what if, it seems to me this is like if it's at a certain percentage and we put a chunk in there and it's only for the real rainy day, then whatever it is, 500,000 is going to sit there indefinitely unless there's unless we get 11 inches of rain.
And it goes back to having a target, that your general stabilization for a rainy day needs to meet the budget, or revenue deficit, or some catastrophic event that you need some money. If the target is, let's just say 5% of your operating budget, and you're there, then let it sit year after year. When you need it and you pull some out, then you replenish it. But that's the whole point of having target levels, so it doesn't just grow exponentially.
We don't want it to grow indefinitely.
Right.
No.
Right.
Well, and when you think about it in terms of the financial or the emergency, it makes the smaller percentage seem a lot more reasonable. I mean, there was a point where we were talking about 7% or 9%, but if that's really not the purpose of it, if it is a smaller fund that is strictly for emergencies and it gets to a cap, then 3% would make sense.
Joe just did the numbers. 5% would be 700 grand. And I just wonder what how did, just thinking as the way town meeting people would, oh, we've got all this money sitting in this account. Why do we need to raise taxes or whatever? You got 700,000 sitting there and you haven't done anything with it for 7 years. I can hear people saying that.
Is it possible we could just, again, I think it's a good stat to have to maintain, we could just, as our planning forecast, if we just always shot to have that percentage threshold above our capital replacement needs, it kind of served the same purpose. So if we're looking at our stabilization chart for the next 3 years, and we said roughly on average we need $400,000 a year to replace those assets. Mm-hmm. So if we just know we have to be 2% above that, or 700, then we'd say okay, then we will actually want 900,000 in there, or whatever that number would be. But I think it would serve the same reserve purpose without maybe us just having this problem every 5 years. We're trying to pull money that's been accumulating in this account that probably, at least as far as everyone in this room, past experiences, doesn't necessarily have a usable purpose.
Right. I don't know. I was just playing devil's advocate because I picture people saying that.
Oh no, absolutely. That's and that's a good process to go through before you adopt a policy to make sure it makes sense.
And I think in some communities where they may be more reliant on, say, a single very large taxpayer that, 1 year could just go under, that would make sense. I've been trying to think of what scenario might happen here. The best I could come up with is some kind of a tanker truck, falls and there's either oil or gas spilling in proximity to a well or something. But even then, it's like, well, wouldn't insurance cover it? So I've been having a hard time thinking of what type of emergency.
It blows up and 90% of the town dies, or
The well's contaminated.
Yeah, exactly. Well contamination is what I was. Yeah, or serious wetlands issues where you could face significant fines if you don't remediate it right away.
I think ultimately the purpose of a generalized stabilization fund is to think, your residents are used to a certain level of service and you're used to providing a certain level of service. When you have a situation where suddenly you don't have access to the revenues that you're used to having access to through a recession or through some giant spending emergency, what can you draw on to make sure that you preserve that level of service?
Okay. When you're talking to the town that our average tax increase average over the last, I don't know if it's 5 or 6 years now, is under 2%. Mm-hmm. So not like we have a shortage of revenue.
Right, and that would be a local. So devil's advocate question, so don't cringe. So you talk about the second paragraph under free cash, use the word conservative revenue projections. So do conservative revenue projections lead to overtaxation?
This is exactly what Glenn and I talked about. We flagged this one as well.
Yeah, the word conservative is all over the place. And I don't want to under-project. I want to project. I said don't cringe.
No. Some communities need that word in there. We always advocate for conservative, but yes, and actually when I did the analysis on your free cash, the question, why do we have so much free cash? Especially, hold on, I have a number here, some pretty paper.
Where is that? Oh, right there, okay.
Bless you.
Your free cash this year,
1.8 million.
yeah, that's not the number. Wait. Oh, local receipts. Your local receipts is the area on your recap where you have kind of the most leeway. And those are things like your motor vehicle excise, your interest, permitting fees, other fees and fines all go in there. And that's an area where some communities get into trouble because they push it up, trying to raise more money. Your last free cash certification, 355,000 of that was excess local receipts. So you were ultra conservative in that.
That's why I said it.
You know, the year before it was 293, 225, 297, going back 4 years. So, you know, there's a sweet spot where you're not being too conservative and generating a lot of free cash or overtaxing your residents, because if you take it off, or you add it to your estimated receipts, then the amount you're raising in the levy could be less, and you leave it in excess levy, which is something that you've been doing quite a bit of lately too. So, you know, define that word however you want, or take it out.
I'd take it out. So
You don't want to, in a policy statement, you don't want to go crazy.
How do you feel? Leave it in, take it out. I'll do whatever you say.
I would leave it in, but with the caveat that there's conservative and there's conservative.
Exactly.
I'm sorry, what's the comment you made with regard to the levy, exit levy capacity?
It's all math on the recap, and you're looking for a target number. So if you bump up your estimated local receipts, you're expecting more revenue in that area. So if everything else is balanced, then the difference is always made up by your tax levy. So if you have more coming in local receipts, you can have less coming in the tax levy. And the calculation is last year's levy plus 2.5% plus your new growth is your maximum levy. Anything that you tax below that, the difference then is excess capacity.
Right.
So, and last year your excess capacity was close to $900,000. It was actually 6.4% of your maximum levy you left, which is another quote unquote reserve.
But that's favorable, right? I mean, that's something you want. In theory, if you can, you want to have.
If we
under your
if we had a new high school that we had to pay for, we've got a lot of excess levy capacity.
right. In fact, that's a good thing for loaning agencies and.
Right. And usually with high schools, you do a debt exclusion on top of the levy because communities don't have a lot of capacities. Now, there's some that have a lot, but I would say the majority of the communities that I'm familiar with actually tax to the full levy.
Right.
Their excess capacity is the amount that you can't split a penny on the tax rate, and that's all they leave
And
sitting there.
The rating agencies view the excess capacity very favorably, right? Or favorably?
Favorably, yes.
We've had finance people that in the past that have been sort of like so shocked or surprised, like, why aren't you taxing to the max?
Because then we'd have a real high tax rate.
You're actually, I did the math on that, just as a side. Hold on, I have another piece of paper here. If in 18 you had tax to the max, yeah, there it is. It would have added to the average single family tax bill $533. Your rate would have been $15.55 instead of your $14.56. So almost another 99 cents. It would have been 6.79% more, or $133.33 on your quarterly tax bill. So
that's a lot.
that is a lot.
We did have a plan, because I keep throwing out all these high school comments because there is a project in the works. So we would have had it, if it was a $90 million project, we would have had enough money through our plan to not raise taxes and pay for our share of a regional high school for $90,000. But
Within the levy.
yeah. Yes.
Not
raising taxes.
Oh.
Not with, well, we are losing some excess levy capacity, not raising taxes. But then they changed it. Now the school, it's going to cost $150 million. So they threw us a curveball. Does the finance committee have any comments on free cash? I'm surprised no one said anything.
No, I mean, we've just kind of been going through the process. The other area I was hoping that you might discuss a little bit is the turnbacks and how that, how that affects our, accumulation of free cash.
Yes, that was another area. The turnbacks this last fiscal year, so the close of fiscal 17 was just over $400,000. The year before was 292, 340, and 447 the year before. So there are significant turnbacks year after year. And so if you just look at the excess and local receipts and the turnbacks, last year, that's $757,000. So there's where you're generating your free cash.
That's the systemic problem. Is it, because how many years is that? Did you go back and look at that in years past?
I looked at the last 4 years.
I would say, for example, we generate that much free cash
All the time.
as long as I can remember.
Well,
Right.
Yeah, so this isn't new.
Well,
No.
and again, you started the certification for fiscal 18, or on the June 30th, 2017 books, a little tongue-tied here, you started with a free cash balance from the prior year. You rolled over $992,000. Excess local receipts was $355,000, and unencumbered, unspent turnbacks was $402,000.
Okay, so that's actually,
There's your
it sounds
100.
bad, but it's only 3% of if the budget's 14 million and we're generating a turnback of approximately 400,000 average for the last few years, it's like 2.8%.
So that's okay, we just had too much in there to begin with.
Right, but all I'm saying is, I think if people can get their budget within 2.8%, I'd say that's a very good job. I don't think that's over estimating your budget. I think it's really being on target.
Okay, it's from what we see, it's a little high as a percentage.
2.8% is a lot. I don't think I could pick a budget that much closer than that. I don't know.
But again, I guess if you're spending everything, right? So if you're at your levy capacity, like by definition, every year you're spending everything because you're like using it all up. So if we're not using ours, then by definition we're gonna be giving some back.
Mm-hmm.
So if that's not a common practice, then I would expect we'd have higher turnbacks, right? You'd imagine, or is that not accurate? So we have to look at other towns that aren't at their levy capacity, right? Basically, other towns are like we're not spending everything.
Well, a lot
I
of
see what you mean. Okay.
Right.
a lot of towns have difficulty budgeting that in the forecast policy, actually in the forecast document, we talk about level service versus level dollar budget. And level dollar is actually a cut because things become more expensive. A level service goes with inflation and the cost of goods and services. So some communities actually do a level dollar budget, and that gets more and more difficult. And because you don't see the turnbacks, they run on a much slimmer margin.
If you've been getting the same thing for 7 years in a row, you're not turning back anything.
Right. So I as an exercise, it's worth going through to actually look at where those are coming from. Is it a single department? Now, last year you had
half the budget is the school department, approximately. So, and we just pay to the penny what we're assessed. So that means that it's actually higher. We're actually off by 5.6 if you throw the school budget, if you discount that, because we're not paying extra, we're not paying less, we're paying to the penny. And so that means half the budget is over budgeted by 5.6.
exactly.
And
exactly.
your debt service and your retirement will presumably be budgeted pretty much to the dollar.
Pretty close, yeah.
Yes.
So I probably had a poor choice of words when I said it, a problem. What I meant to say was we know for a decade, all right, but at least 4 years that you went back, and certainly beyond that we've had a situation where the revenues that are incoming are higher than, generally speaking, somewhat higher than what they should be, and the turnbacks are somewhat higher than they should be, and we've had this persistent level of free cash that never gets turned away because we're bringing in too much and we're not spending all of what we should be spending. So essentially, if there's a way to address that, that would address kind of the long term,
Well, I think they did in their, it says that town shall set a goal of maintaining its year-end appropriate free cash between, or in the range of 3 to 5%, blah, blah, blah. The town will appropriate any excess above this target range to build reserves or offset unfunded liabilities. So our stabilization fund is nowhere near funded, if you do the math in the out years. And we've also got a huge unfunded pension liability. So if we follow the policy, that won't happen. That's not going to be there. And also, and I left out the school too, which has a stabilization fund. So those three things, it's gone if you follow the policy.
If you accept the policy as written.
Right. If we accept the policy as written and then follow it, which I would like to do.
So 10% of the, does anyone remember what
page you want?
Page 19.
Well, can we finish?
Okay.
So what do we do about this? We're kind of talking about it. But
okay.
The free cash, the last paragraph on free cash. Do people agree? Don't agree? I know there was also a recommendation that excess free cash be used to reduce the tax rate, which if we had all of those stabilization funds fully funded, I agree. And we actually voted that on November 27th as part of a budget message. We said that capital items currently paid for with free cash must be part of a funded plan, and then it goes on to talk about tax rate reductions only after the stabilization funds are fully funded, which is kind of what you said. How does that feel to you guys? You guys have had a lot of discussion about this?
Yeah, and I don't know what page it's on. There it is on page 21, I believe, right? There is a kind of list of items where free cash might be a source of funding. Is that an order of priority list, or is that just things that are that it might be used for?
It's just a list, and if you notice that everything's in brackets, and
that would be up to us to prioritize it.
Yeah.
Yeah.
No, I'm just wondering if there was a recommendation from DLS behind that.
Probably that would be our order in there. OPEB for West Newbury falls to the bottom. Other communities, it's at the top, but you're fortunate that your OPEB fund right now is fully funded for your actuarial liability. So there's really, and you're on a pay-as-you-go basis, so you're not drawing down from it. So that would be at the bottom of the priority list.
Could you, now that our chairman's back, because I know that this is a question that a couple members have, could you discuss the rationale behind the snow and ice deficit being, free cash being a source of funding to address, like how do other towns address that, and where did that policy come from?
It's a mixed bag. Communities use free cash, so you are funding it in the year that the obligation occurred. In your Springtown meeting, using your free cash covers the deficit. You close the books without a deficit, the account is zero. Other communities take the option of it's a legal deficit, which means you can close your books with a snow and ice deficit. It is not a hit to future free cash, but you raise it on the recap.
So your levy would go up.
Your levy goes up to cover it. Some communities are adverse to that because you're using future dollars to pay a past obligation. So you're not in the same tax year.
And you're gonna have to pay that year's snow also.
Yes.
So you're gonna pay 2 snow bills in the same year.
Right. I think, you know, under the best practice umbrella, pay it in the year it happens. It's a good use of free cash. And you'll find actually in the forecast
You
document.
just said it's a good use of free cash.
Yep.
In the forecast document, you'll see that,
I understand
sorry.
and I agree with it. I just
Okay.
think that in past discussions, the committee is wondering whether, more prudent budgeting might diminish the use of free cash.
The problem though is how do you budget for what the snow's gonna be? So, I mean.
5-year moving average would be a good
myself-
start.
Myself, if you have a min-max, I'd budget for the minimum and then just wherever it comes in, free cash.
Well, I think
If you do a higher amount, then you're over.
Then you're going to generate more free cash if it doesn't snow.
this is state sanctioned irresponsibility. They allow people to deficit spend for snow and ice. No community in the Commonwealth comes even close to adequately budgeting for this.
I agree.
And the state says it's okay. It's not responsible. It never has been.
I agree.
well, to your point, in the forecast document, there's a paragraph on snow and ice, and our recommendation is to bump up. You'll see a table and averages, and we're recommending to put a little bit more into the budget for snow and ice. And it states, to your point, that if you put too much in, it'll close out to free cash.
Right.
So,
So the FinCom doesn't have anything on with
The amount.
amount of free cash in excess of whatever is reduces the tax rate. You're not doing that.
I think everything in there seems like makes
Okay,
sense.
I'm just asking because I know that was brought up in the past. So
But again, I think like the biggest issue with the free cash, it wasn't necessarily, like I said, probably we're generating it at a relatively normal rate, but it's just, in past years, again, we've just been maintaining it in that pool where perhaps it should be moving either into other other places, or being used appropriately from its current position.
yeah,
But everything in this document, it does all that, so it all makes sense.
What was the number that you guys came up with in the fall that you wanted to maintain? Wasn't there a free cash number that you?
3 to 5.
Was it, so this is precisely what you had.
And again, it came from us reading DLS reports to seeing kind of what they were recommending, so it may have been a little higher.
It was.
I think we went 5 to 7
Yeah.
just to be on slightly on the higher side.
Yeah. And I believe the original finance committee recommendation, I could be wrong about this, was 7 to 9. So we were thinking of a sort of a step down approach, but I think the general consensus was that the number that's in here is agreeable.
Did Mr. Kemper have any comments?
His comment was with regarding the retirement stabilization fund and the 10%. He understands that's a placeholder number, but questions where.
So does anyone remember what is our annual contribution about 5.5, 600,000, something like that?
Yeah, what is that? Was
I think that's what it is. So 10% of that would be 55,000, and we've been
And that's
putting
what we've
in
been
50.
50,000.
So we've been doing that.
Yeah, that was my concern. We've been contributing 50. How much is 10%? So that's
Pretty close.
Yeah, that's okay.
yeah, I think that's where I came up with the 10%.
Oh, you
I
came up
looked.
with that. Okay,
Yes,
yeah.
I did. You're one of the few communities that has a pension stabilization.
And we'll be one of the few communities to fully fund our retirees' pensions. Okay,
Yeah.
so that's okay. So just leave it.
Okay, but I have a question on, back to the stabilization, the other stabilizations. We talked more about having a general stabilization and a small amount, and your capital is what you currently have as a capital
That's where all the
stabilization,
money
even though you
is.
call it stabilization.
Right.
So where did you land on what stabilization funds you have?
I don't think we have.
I don't think we have. I didn't think
Okay.
that's something that we have to think
Keep
about.
thinking about.
Your comment about the rating agencies might look more favorably on us with a general stabilization account rather than just the free cash checking account kind of I think that gives us some food for, it gives at least me, some
Yeah.
food for thought.
And we should include Mr. Kemper too. in
Yeah.
this. Yeah, so, and then also keeping in mind what's the total percentage of cumulatively of all of our reserves. We don't want to. Okay. One question on page 20, overlay surplus. At the conclusion of each fiscal year, the Board of Assessors, so this is another one of my by when questions. So like, when should they do this by? At the end of the year, yes, but.
Yes, well, it depends on if you want to use it. If, I know you just had a large release before the end of the fiscal year. If it's simply to close out and drop and build free cash, then by June 30th. But if there's, let's go back to the fire truck that you need, and that $300 that was just released from the overlay, you wanted to put that towards the fire truck, you would do it before town meeting, so you could appropriate that at town meeting, either for the outright capital cash payment, or put it into your capital stabilization.
So it doesn't have to go, okay, I did that.
So it does it have to wait until, say, the abatement period has kind of ended, which is very short window on that?
Right,
Yeah.
well, again, municipal modernization changed the way we handle the state, or the overlay account. It used to be that you had an overlay
Several
account for
years.
each levy
Right,
year,
right.
and you had to look at them independently. Now you can look at it as a whole lump of money, and it gives you some more flexibility. And if you don't do it in the spring and close out for that current fiscal year, but you roll over a lot of money, and you're having a fall town meeting, and you want a source of revenue, and you want to tap the overlay, then you do it in the fall. You know, it depends on what you want to do with it when you need it. So, but at least so it's looked at least once a year.
Yeah, okay.
So you'd say before because this says at the conclusion of each year, so you're saying before the conclusion of each year.
Yes, or by the conclusion of each year.
Okay. Just one word makes it.
Makes a difference, yes, words matter.
Yeah. Good. That's perfect, so we'll put before.
Okay.
Thank you. Okay, next.
Forecasting.
That didn't sound good.
To the extent.
He's
okay.
got a lot of writing on this page.
What do you mean this page? Every page. Page 22. So, to the extent feasible, the Board of Water Commissioners will set water rates. When should they be doing that?
When should they be doing that?
Yeah.
With the,
When in the budget, like,
Well-
cycle should they be doing that?
when they create their budget, they first start with the amount of revenue that they're going to generate, and the expenditures offset. Well, if they have more expenditures, then they'll need more revenue, which means a rate increase. So
they should do
It's
it
in
in
the
consult.
budget
So, okay, so you
season.
answered the question.
Yes.
So in consultation with creating their budget.
I don't think that happens.
Well, that's why I'm asking. So if we set a date certain, that kind of makes it a little more visible.
I don't know in practice how that's going to work. One part of my understanding is where they're subject to Newburyport's rates, and they can't count on much, if any, advance notice of rate changes in Newburyport. There may be times mid-fiscal year that they have no choice but to raise
It
rates.
doesn't say they can't do that, though. They could do that. I mean, if they had an unexpected rate increase from Newburyport, they could increase their rates 4 times in a year,
Right,
right?
right.
well, the key is going to be, it's the revenue that you're expected to raise is on the recap, just like the general fund. The enterprise has its own page, and with the revenue on there, the increase has to be voted before the recap is put in there, because that's one of the checkpoints that will have your tax rate not be certified. If you're trying to raise more revenue than your rates will provide for.
You're on both ends of the fiscal year, because they do their budgeting like early January. So I liked what you said. The tax recap obviously is October or whatever. So,
But if you find, say, July 1, you get a notice from Newbury.
oh, so this could be a year of a double
So
increase.
then you might have to raise it again
Okay.
to make your budget work for your recap, but you need to do it before the recap, because, like I said, just putting it on the recap without a vehicle to raise that revenue, our office will not approve your tax rate.
So they,
okay.
right, so they could set their rates in January when they do their budget.
That's what makes sense.
And that would be the kind of annualized, and then that would be the emergency if Newburyport would have a unanticipated rate increase. So could we add by January 30th?
Yep.
Do you agree with that?
Sure.
And I might put something about unanticipated required for
Yeah,
recap.
yeah.
I'll use better words than that, but
Did Mr. Kemper have anything?
His basic comment was on water in general was and he was more talking later, but I think this relates, is that there's, he feels there's a lot in here that, especially on the accounting side, that may exceed what the water department currently is equipped to do. So his main point was that he had a lot of questions and recommended a joint meeting to include the Water Commission before anything is put into place.
I was curious, I'm still on page 22, the last bullet point says, so as to minimize any general fund subsidies, because we haven't historically had any general fund subsidies. And I would only see that in the case of, we had talked about maybe building a new giant well to get off of the Newburyport subsidiary, but I mean, other than that, because we have 58 or 60% of the residents are on the water system, and the other less than half aren't. So there's a little bit of a balance to keep everybody happy. So
There have been capital subsidies, though. There have. We bought land for the water department,
Oh yeah, a long time ago. Yes, yeah, that's true.
and we helped pay for well testing on a particular site.
Yeah.
So we
That's
have
true.
had
That's true.
capital expenditure subsidies.
and at the end of the fiscal year, if the rates were not high enough and you end up with a revenue deficit,
Then you don't have a choice.
then exactly, you're going to need a
Well, then it's
subsidy.
our problem anyway.
Okay.
Emergency.
Okay, under moving down the expenditure guidelines, the second paragraph. Okay, I understand why you have it. However, is this a good negotiation? We've avoided this because we have felt that it's not a good negotiation tactic to let the union know how much money they have, because then they've got a base. The way they would look at it is, oh, now I've got a floor of I know what I have.
No, they'll at least give us this.
We're at least going to get this, so we're going to start.
Yeah, we're like we're showing our cards.
How necessary is that paragraph?
It's not.
I would kill it.
All right.
I think that's great. Yeah.
Actually, then taking this paragraph out makes it consistent with the forecast document. So you'll appreciate the way the forecast document is done.
Okay.
So I'd like to add a brief paragraph after B. So as a new C, we're required by our special legislation to have at least one annual budget message. So I would just insert that in the policy that the Board of Selectmen shall approve the Board of Selectmen shall approve their initial budget message for the following fiscal year no later than their first meeting in December. And the reason for that timing, that it gives the town manager clear direction that's right when he's in the gathering process from department heads or beginning the gathering process. And then putting his draft budget together in early January. So I would just insert that and make paragraph C, turn that into D.
C, D. Okay, will do.
I won't say anything more about the word conservative, I'll leave that alone. In that paragraph for financial forecast guidelines, the town manager will provide the forecast to the finance committee and board of selectmen. I don't know if we want to put this in. This is historically what we've done. No later than the third Monday of January for use in their budget decision making.
Okay.
That would be nice.
I mean, that's kind of what it's been.
Joe likes calendars.
Well, but you know why? Because then everybody is on the same page.
Otherwise, you got to decide every year when you want it.
Yeah, right. You don't revisit the same issue, right?
Absolutely.
Okay, conservatively, we'll leave that alone. I mean, I think that paragraph would underestimate revenue. That's fine. In the next page, additionally, town forecast model should assume that. The third one, new growth be projected conservatively, taking into, okay, you have that. Never mind, strike that. I'm good.
Okay.
Yeah.
I don't like bullet point 2. We've been, since I've been on the board, we've been trying to keep
Yeah, we've averaged one.
increases under 2, and we've been doing that. I don't want us to go to the max.
Okay.
At least that's my personal, I'm not saying
I know,
as a
I'm
board.
totally
Joe
agree.
usually agrees with that too, yeah.
Yeah, we are saying it as a board.
You could say within the limits of Prop 2.5, and that leaves you open to not say, well, we will max it out.
How about can grow to the limits of versus
But we'll strive to
Right,
be
not the-
less than.
It's the word will that's,
will has a
Yeah, shall.
mandatory
Yes.
sound to it, yeah.
okay, that's good.
But we'll strive to be less.
Yes.
So can, and we'll strive to do less. Good.
Okay.
Anything else on,
Yeah, I'd have a question of the last sentence above that sentence additionally, so the first complete sentence in top page 23, that the revenue projection should not exceed 90% of the prior year's actual collections. I don't know if that's necessary with, I think the prior sentence talking about conservatively based on historical trend analysis, generally accepted forecasting techniques and appropriate data. To me, kind of gets the point across. I don't know if that
yeah, I would take it
sentence
out.
about 90%.
Well,
I guess it's nice to have a metric. Like, it's not saying you have to follow it. It's just saying, hey, this is like, if you're at 93 or 85, you're within the ballpark. But if we were at 99, you might look at that and say, oh, maybe we're higher.
But
I
this-
think it's just a reminder.
But it's because this is a shall.
Well, it says should.
Generally not.
It says should, but it's
Because like I said, we all in this room might know what the target is today, but it's like 5 years from now there might be new faces, and they might just say like, I wonder what the target should be,
Right.
or what would.
What do you think?
It's just it kind of gives everyone a reference.
I don't have a problem with it. I'm just thinking what happened after the downturn in 2007. We don't have too much of a problem with real estate tax collection, right? That's pretty stable and so forth. But
Very
people
good.
did buy fewer new cars, and in this town we don't have a lot of fees, we don't have a lot of licenses or anything else, but one of our local receipts that is somewhat significant is the excise tax fees, and that can change a lot. People can, I'm going to hold off on buying a new car for 3 years, and that makes a big impact on us. So I don't know. That one can move, so I think there should be a metric. Yeah.
95.
Okay.
you don't want to push it any higher than that because, again, in our review process for, to approve your tax rate, if you push it up any higher than that, the Bureau of Accounts is going to want justification for it.
Yeah, we'll take a closer
Oh,
look.
that, I remember hearing that, yeah, that,
Okay.
So
I guess
yeah.
that's that.
Not everybody knows Newbury's good practices.
Okay. All right, so we're done with that section. We're done with forecasting. Grants, anybody have anything on grants?
no.
I have one question. So it says all municipal applications for grants exceeding $5,000 must receive pre-approval by the Board of Selectmen. So what about grants under $5,000? Should grants under $5,000 receive pre-approval by the town manager? Because a $4,999 grant needs nobody's approval. I don't know if it's necessary.
We get so few grants that it's not really, that's one of the things that's not a major job.
True.
It's not a big problem for us. We see them, we okay, yes, no, we don't get like 100 of them, so it's.
I think my understanding of the other selectmen policy that we talked about last Monday on this same subject is that the main concern is to make sure that any kind of local match is understood and agreed to prior to a grant being put in, rather than necessarily the dollar amount of the grant being awarded.
Right,
The
so there
concern
could
is
be a
more what's the
$3,000 grant, and we have to contribute $7,000. There could be that, yeah.
So I don't know, what do you think, Marcia? Do you have a recommendation?
We generally see the lesser grants don't have a lot of strings attached, matching pieces to them.
Yeah,
So that's why, leave it up to the department head if they want to pursue a grant.
I'd leave it up to the town manager, because if it's up to the department head, then it's between you and them. So if you want it in or not, to me, your call.
Yeah, I mean, I wouldn't want to overly bureaucratize seeking grants, because there are like workplace safety things where you can get new chairs or those kinds of things
So
that.
don't do it, you're saying.
Not necessarily. I think the policy that the selectmen have requires some level of approval. I think this may go beyond what is needed. So I would say we should review this against the current policy and see how much additional
I
paperwork
think
needs.
this is something I think we actually have pretty reasonable oversight on. I don't know. What do you think, Joe? Don't know.
Well, no, I was going to say that anything under 5,000 would be reviewed by the manager.
Or if there's going to be a threshold, maybe it's based on what the local match requirement is rather than the amount that's being given.
Could be, yeah.
Okay.
Okay. Anything else on grants? Anything on indirect cost allocation?
I didn't. I thought it was pretty straightforward.
Me too. Do you have any comments?
Okay. On, now, page 30, investments.
Big discussion on this. So I presume you looked at our policy, which is probably a little too big.
And this is very similar to that. The Mass Collector Treasurers Association puts out a policy, which is in the appendix.
I saw it, yeah.
So this is the high level of that. Yours was that you had in the policy document was a little out of date, so this is just an update to that. Municipal modernization had a change to it also, so this reflects that.
Okay, so yes, and also ours went on to talk about our investment committee and the appointment of what the structure of the committee is, the membership. So we probably should kind of look at the two in tandem.
And you still have an active investment committee?
We do. They meet quarterly.
Okay. And for both...
They're an advisory committee.
For both the town's investment and OPEB, or what do they advise on?
Well, unless you tell me they can't advise on the OPED, they advise on everything, but if they can't, then they don't.
Well, with OPEB, and that's you should have a named trustee or board of trustees.
Named
And-
trustee is the treasurer collector.
Okay, and
Anyone like any more?
oh, please, thank you. We'll get to OPEB, but so your investment committee is just looking at the town investments.
That's what they actually, I was a little
Okay.
weird, but that's what they have historically been looking at. They've inquired about the OPEB, but haven't really done that.
Okay.
I think they would like to.
Okay. The OPEB statute is very specific and to be in compliance with the new GASB statements. Previously, having the treasurer as the trustee, a lot of communities did that, but with the readoption of, what is it, 3220, and actually that's in the intro. I'm just going to refer to that so I make sure I. Okay. Designate treasurer collector as fund trustee or establish a separate board of trustees. The board between 5 and 13, minimum of investment experience, citizen at large, employee, retiring, a local official. And the GASB statements are leaning towards the board of trustees. Now, you could designate your investment committee as your board of trustees. It's not a requirement, but it is good best practice. What we find is the OPEB funds are growing and the treasurer collectors generally don't have the investment experience to manage that.
I would.
Because you're assuming your target rate of return is, between 7 and 8% to grow, parallel to your pension plan. And that takes a lot of expertise to maintain that.
So, okay, so this is what we've done. Well, actually, this is what we've done through June 30th, and the investment committee has not met after June 30th. They have a meeting in a few weeks. We have like I said, an active investment committee made up of 2 people that are actively they're managers in the investment world.
Okay.
Another person
That's good.
another person that owns his own small venture capital firm. So you got a little diversity of different people there. You have a member of the finance committee and you have a member of the board of selectmen. So you've got some very good by design community expertise and so we've had them as voting members and the treasurer collector as ex officio, and he had attended the meetings and was part of the discussion. And the investment manager typically comes in twice a year and goes through the whole portfolio and analysis and blah blah blah. So it's kind of a group discussion with the treasurer. Then you're right, the expertise of a treasurer collector is not, but then you've got all this expertise and then they're sent off to, so we've kind of done a little bit of a small hybrid of what directionally you were saying, but not what you were saying.
Okay. I think for your OPEB fund, that setup would be very good. You can always put your treasurer on that board of trustees and a retiree. And that way GASB is satisfied because you've met the criteria. On your general fund investments, the key is liquidity and safety. So as long as that group of people keep that in mind, that you're again, this goes back to a general stabilization fund, you want to have easy liquidity. If you need to go in and get it, you want to borrow against it. So.
Okay.
So let me, Is the committee, is it documented anywhere? Is it, where, how did I miss that?
We have the investment policy that's 30 pages. And
It's a big
it's in there.
document, yeah.
It's at the end, but it's in there.
Oh,
I can, I think I have a paper copy somewhere.
okay, because I'm not sure I saw a 30-page investment
Yeah, I got it.
policy document.
I'll dig it out at the end.
What I saw was like the 5-6 MCTA policy in your
No,
binder.
We have
No.
okay. And we have the, you know, the good list thing, all the,
Prudent
we
investor,
have
yeah.
good investor, prudent investor thing, and what's, everything is listed there.
Okay.
Yes, it's actually too big.
Okay.
We need to,
Pare it down to something closer to this.
yes.
Okay. But yeah, if you could forward that to me, and I'll work that in.
Um,
Lo and behold, OPEB is next.
Oh, one second, just so we've got, I don't know, Marcia Deal, what's your, we want to keep you here till the end of the night, so what do you think we should do?
The ones after,
They kind of go quickly.
they get a more,
After OPEB, it moves.
yes, it does, because they're more specific to the departments as far as reconciliations, and, you know, the policy is thou shalt reconcile, period. There's a few more words around it. Year-end closing, the recap, those are more procedural. We try to stay away from procedures, but again, it's documenting the dates and the responsibilities for those, and it's not so much that it's not being done correctly here or timely, it's just to
Codify it.
it.
Okay.
Okay, well, I just don't want to hold you.
Yeah, so
hold
the
you
end
up
will
till
go quickly.
Forever. If you think we can get through, then let's do it.
Let's push on.
Okay.
So on page 32, in ethics, can you define large personal financial investment? I mean, what's that? What's large?
Oh, it's
It's not specific. Sorry. I
no,
did.
that's okay. It's how do you feel is large?
I'd put a dollar amount.
Okay, and what?
I don't even quite understand that sentence, to be honest.
If it's a material investment, you know, what is, I don't know what that is.
In other words, if someone owns
They can't
some,
own, they can't own
they
something
own
that
some
they're,
stock, and then they advise the town to buy some more of that stock with the intent that it drives up their value of their own. I said theoretically, but it.
well, yeah, it is.
Yeah, but
That's the point.
Let me
Take a look at that.
let me take a look at that.
see
and
if you have any idea what in
I
the
know-
other towns what that might
Yeah,
be. Yeah.
Okay.
the retirement system has a lot of guidance. Each board member has to do a financial disclosure, and there's dollar thresholds on that.
The actual dollars.
Yes,
Okay.
let me reference that.
Okay, OPEB, anyone have any thoughts on that?
So how should retiree healthcare, how is retiree health care being paid? Do you have any idea how it's being paid for now? Is it being paid for through taxes, or is it being paid for through the trust? Do you have any idea?
I believe it's being paid out of, I know I signed a warrant, it was paid out of the operating budget.
Taxes.
Yes.
Right. So when we, I don't know if we're 100%, we were, but I don't know that I thought we're like at 90 something now. So when we are 100% funded, should payments be made through the trust at that point? Or is that what, or this is just supposed to be a reserve?
Well,
What's the purpose of it?
the purpose is to have the reserve to pay future liabilities. And in the case where
So not to use it to pay liabilities, just to have a backup.
Exactly.
Oh.
Now certainly, you're fully funded, and you could use that, but then you would have to have a plan to replace it.
We were, for a while, we were like at 110% or something, so that you could certainly use the 10%.
Okay.
Okay, that's fine. That's a reserve.
Okay.
On an annual basis, the town will okay, the very last sentence of page 34. On an annual basis, the town will analyze its option to invest. Okay, the town, there's a lot of people here. We have 4,600 residents, so who is?
Well, the town being the policymakers. That's,
so does that mean the selectmen or the?
The selectmen, the finance committee, the policymakers.
Well, the investment policy committee might decide
Or the
we
investment-
can do better with the state board than our own private board, a private investment firm.
Exactly.
So
We could fire
You
the
want
people.
names.
my note is who is responsible for this?
Do you want it to be a Board of Selectmen, FinCom, and Investment Committee responsibility?
Probably, yeah,
And town manager?
yeah.
Or just the policy boards?
But like the investment policy committee is who's reviewing the performance.
Right, they're an advisory board, so
Right.
they don't have any decision making.
Exactly, but they might say in their,
Yeah, that they'll,
Opposed policy making
Yeah, they don't have any power to, but they're not.
in that committee, but.
Yeah.
How about if the investment advisory committee would analyze that option and make a recommendation of the Board of Selectmen on an annual
oh,
basis?
that's good, yeah.
yeah.
Yep. When will we be making that recommendation? Do we need a date with that, or? Sorry,
I know.
not just getting going now.
It's catching.
I don't know, do you prefer to do it before town meeting and before the close of the year? In October,
Do you have
when
any
the leaves are
recommendation?
pretty, no.
I would think like in the after the annual report is a June 30th one, is that right, Joe? Or did you get a report at?
Oh, from you can get it anytime you want.
No,
Yeah.
but sort of the annual review is probably, you want to
Oh.
know a 12-month performance of the.
We've typically gotten an update quarterly, so within 30 or just after 30 days of the close of each quarter. That's when the committee met and got updates. I would think that I know that the former finance director got updates. You know, he reviewed it monthly.
Right, but so when do the people do their dog and pony show?
There's not a specific. They come in every other. There's not. It's
They come in quarterly?
no every other
Twice.
meeting. Every
Twice
other
a
meeting.
year.
Oh, twice a year, okay.
It's not that formalized.
You know, maybe in the fall, it makes sense that if you would want to make a change, you would do it as of the first of the year,
Okay.
just to give it a,
Okay. Anything else on the business? So we talked about overlay before, and we said that the assessors were gonna make the review by June 30th, is the timing. Because there talks about timing in
Right.
here, in A and B.
okay?
In C, what defines a surplus? What level or how much money?
It's up to the assessors.
It's somebody's opinion.
It's the Board of Assessors that determine, when they look at their outstanding appellate tax board, ATB filings. If there's none there, then they don't need any. It's all closed.
Can we give them some guidance?
They generally know. Boards of assessors are pretty in tune to their overlay.
True.
They in my experience, I have found that they don't like help with.
They don't like help? Okay.
With on the surplus, that's their area.
Okay, fine.
But they'll look at outstanding receivables,
I
ATV
think you're right.
cases.
No, I think you're right. I think
you're right.
we've attempted to encourage them a few times and they didn't like it.
Yeah, they push back.
Anybody else? I did not have anything on procurement conflict.
I had nothing on procurement.
We had a good meeting last week with Mike McCarron, and I think we all kind of felt that there would be some benefit to revisiting kind of how we handle procurement. He had said that one of his goals is set up a procurement office, and well, basically just to clarify who does what in a given purchasing, because, you know, who's preparing the specs, who's doing the bid documents, who's issuing it, all of that. I know there's some concerns from other departments at times about timeliness, and where we have a single individual who has an enormous number of job functions.
Varied duties. Yeah.
Right, and it's going to vary from time of year, and, you know, so there's instances that things don't get out as quickly as the department head would want or need, and that does sometimes have real effects.
So does he have a recommendation?
Just that it needs some more work. And he did say, and I agreed with this 100%, is that the draft policy in here, some of the confidentiality things that would be, just the documentation of that would be very burdensome for a one-person office with next to no support staff.
So does he want to like look at this and give us some specifics?
I'm sure he'd be happy to.
Okay.
I mean, Marcia, you were at the meeting.
Yes, well, and this particular procurement policy is geared towards federal awards.
Oh.
And there's a lot of paperwork and requirements around federal contracts.
Less applicable here.
And there's not a whole lot of that here, so, especially without having a school district or a local school. So, and simplify this, I did give your town manager another procurement policy that's a little bit more streamlined for the actual purchasing. So maybe between the two of them, you'll come up with exactly what you need.
Well, and I know I, for one, would like to get a better handle on who has authority to sign contracts on the town's behalf.
Great. That was the best move we ever made.
Hiring a town manager? Hiring Angus?
It's still early.
It's too early. Okay, it's too early. Ask me in 6 months. It's reconciliations. Does anybody have anything?
See, the end of the document always goes faster.
Oh, I knew that. I've gone over this 3 times. Revenue turnover.
You know, one comment that came out of the meeting with the town accountant, at the bottom of page 43, the reconciliations by the 15th of the month is way too prescriptive. We sometimes might not get all the bank statements by, you know, until shortly before then. So, as you know, the FY17, that was a continuing problem. In FY18, they got it worked out.
Good. I know.
But
Would you object if we just said by the end of the?
That's exactly what I wrote.
Okay.
So yeah, just so you finish the last one before you go to the third one.
I'm just thrilled that it's being done.
But when you take into account small staffing, someone's out on vacation, someone's sick for a couple of weeks, you know, something that's overly thou shalt, it doesn't always
Yeah,
work
but
that
some
way.
banks don't do their thing until the 5th, and then it's the 12th and whatever.
Right.
Okay. Revenue turnover. I have one question. So, I know there's a lot of people that receive revenue and you address it, but in terms of like the collector function, so the main, that's where all main money goes through that office. So who should be receiving payments there? Obviously, number one, the treasurer collector. And like, what's best practice for like small building? So like the second or third person.
An assistant to the treasurer collector or somebody within the treasurer collector's office. And I know the way you're laid out now, that's the town accountant, but anybody but the town accountant. So you want to keep the...
Not really the assessor's office either, though.
No, that would be after the town accountant, the next last person is the assessor's office.
That's why.
Exactly. No, you want to maintain the segregation of duties and think about the financial roles and not have an overlap there.
Okay, so it could be a lot of different people, just not those people.
It could be a lot of other people.
I knew not those people, but I didn't know if there was like a...
No, if you have a named assistant treasurer collector or a clerk that works in that office. The other thing that you want to be careful of, though, is you want to make sure it's all going into the same place. So you don't want people taking money to multiple locations within the building, because then you lose some internal controls.
Right. Okay. Yeah, I mean, we have, she goes on vacation, and then, a lot of part-time staff don't work on Fridays, so Friday morning, it gets kind of limited.
I mean, I brought a Dot on Friday for that exact reason. I needed somebody who could handle cash.
Yeah.
And even she was only available for the first 2 hours of the workday, so.
Then it was
well, to my knowledge, no one came in between 10 and 12 with cash. If they had, I think, I don't know.
Yeah, and we can talk about the letter later, but okay, so that was, anything else on revenue?
I just wondered about, in the middle of policy there, it says, must do so immediately whenever cash receipts total $100 or more. I mean, literally, someone gets $100, they have to immediately go to the treasurer collector. I mean, what if it's in the police department or something? That seems overly restrictive.
Well, when you say it out loud, the word immediately, or by the end of business day that the receipts total. What this is trying to avoid, and maybe $100 is not the right threshold for you, but departments just collecting money and keeping it in the drawer and forgetting about it and not turning it over.
So it should immediately be that day or that week?
Weekly seems reasonable to me.
Well, I'm not sure.
Okay.
So you want to do it weekly regardless. Even if you have $20, you want to turn that over weekly. You don't want to wait till you hit that threshold. But when you hit the threshold, then that day you want to turn it over.
So that day, immediately is that day. So maybe we could just say that day.
That day instead of immediately.
Yeah.
100 seems low to me.
We'll change the threshold. Change the threshold.
300.
What do you say?
If you're happy with 3's good. I'm dealing with a community that every amount of cash that came in the door was stolen in Zelnell. They don't collect cash at all. So.
Do you?
A lot of,
does your building department, though, an average permit fee, if are they getting $100 a day? That might be a little low for them.
Yeah, they're getting more.
Yeah, they're getting more.
That's a department that generally collects a lot of revenue.
Higher amounts.
Yes. So maybe for you, 300.
2 or 300?
Do they get fees?
About 250.
Planning?
250?
That's fine.
Okay.
They do get fees. I don't know whether they collect them or whether they direct them to the treasurer's office for that.
don't know about planning board, but there are fees, but you're right, do they get them? I don't know.
My guess is they don't,
Tailings.
but I wouldn't swear to it. I think they are directed the treasurer to pay those fees.
I mean, tailings, I agree, and I think we should do that.
Okay, this is one that it seemed like we're creating a lot of work for a small department.
Well, it's,
The paragraph, the last paragraph on page 48, and a few of the listings yearly. Boy, this is a lot of work to, maybe there's a $7.98 check, and we've got to put a notice in the paper, and we don't have a zillion employees. It seems like a lot of work.
well, the procedure that's laid out is by statute. So
It is.
that's required. Doing it monthly, believe it or not, it seems like more work, but that makes less work in the end, because if you stay on top of it, you never get to the yearly review.
But what about the advertising costs?
Oh, that's a department expense.
Right, I mean,
Yeah,
So
I mean,
if
we're
if
putting
you-
an ad in, we're small, so we're gonna put an ad in the Daily News. It's probably gonna cost $175, and the checks might be $300.
Bangor
Is
Daily
there a
was
prescription
300
for
minimum
what
for
qualifies
any
as
kind of
media?
ad. I haven't.
In other
looked into
words,
it.
if it were to be posted,
On a website.
yes, on a website,
Most communities have it on their website, but when you hit the threshold and once a year, it has to go into a local newspaper by
Once a year.
statute,
Once a year.
once a year.
Well, twice a year. If you get a 60 days later, you get another one. I don't know. Okay, so I can't argue that.
Yeah,
If it's statute, it just seems like a lot of work for the people to have
Right,
to do.
but again, if you stay on top of it and do the monthly review and fire off a letter or a notice,
Why is it a problem to have, say, 20 checks that get carried over for a year? It's just, okay, it's put down as a debit, but you've already appropriated the money, so you know it can be paid.
Here's the statute. Okay, it does say, I mean, the deadline's on 60 days.
Okay. End of story.
So,
you want to keep your books as clean as possible, and
tax enforcement.
it makes reconciling a whole lot easier.
Oh, I know
It's just-
that,
It's good
yeah.
practice.
We're gonna have to emphasize that with a number of departments, for sure, because I think some departments take a pretty laid back attitude with regard to collecting on some receipts and checks that are outstanding.
No, this is the other way around, is that they paid a vendor and the vendor hasn't cashed the check. Like, call the vendor up and say, how come you haven't cashed your check? I mean,
That's what I'm saying.
I know, it's just, I think if you were maybe in a private business, you might think that more clearly than, you don't think it's your responsibility if you.
I would never do that in a private business.
Well, and just so you know, that was a policy that was specifically requested when we did the initial
Okay.
list, so.
In my old town, we required every employee have direct deposit. We had a lot of part-time rec pool, and, you just didn't want these checks hanging out there, because an 18-year-old kid might not. We don't have anywhere near as large a payroll, but with the reserve officers, it was, I thought that was a good policy. Every payroll was just a ACH transfer.
That's a good
There
idea.
was, so at least that portion of your budgeting, that part of reconciliation was very simple.
That's a good idea.
And
We
we
see
actually
that a
had
lot.
we actually had a deal with a bank where they'd give people a $25 credit to set up a new account. So if you had an employee that didn't have a bank account, well, now you do, and you should anyways.
I don't have those bank accounts in Maine.
Okay, tax enforcement.
That's a cheap shot for the record.
Go to West Virginia, they don't have banks.
Oh, man.
It's obviously getting late.
I'm kidding.
Getting punchy.
I'm kidding.
The hour has arrived.
Yes.
So on page 52, redemption or foreclosure, what is significant value?
The first paragraph in the middle.
First paragraph. In the middle of the first paragraph.
Oh.
Page 52, paragraph
Oh.
F.
Significant value would be properties that the town would want. It's a value to the community. If, you know, a nice big piece of land that happens to have water underneath and they forget to pay their taxes, you're gonna foreclose on that in a heartbeat.
Okay, so just somebody's opinion, the town's opinion, okay.
Yes.
Got it. So tax enforcement policy to be adopted by town meeting, looks good to me. It was in your introduction. Okay.
Okay.
Tax recap, page 53. I had one small comment on the policy, mail the actual tax bills by December 30th. Sometimes people like to pay their bills
In that year.
in the fiscal year to get a deduction on the income tax.
Calendar
So
year.
if you get it December 31st, it doesn't help you.
To change the limits on there.
Well, I know,
That's
but
a withholding, so they're probably not gonna do that anymore. Because the standard deduction will pretty much eliminate that tax.
correct, but some
scheduling
people
for
still could do it.
75% of the population.
Well, they're required by statute again to be out on December 31st. Well, if they're out by December 31st, then your collection is February 1st. If they're late, then the date that they're due gets pushed off.
Oh,
So that's the outside. The values may be they will be available before that, as soon as you set your tax rate and your assessor
it should
works on the
be
values and
approved
does
by
the bills.
DOR in late November or
Right.
something like that.
So, you know, if the resident goes into the collector's office, they can find out the amount of the bill and pay through that, but they should be out by December 31st.
Okay.
Okay.
Anything else in the tax recap?
The part B, page 54. This sounds like a lot of stuff to get done right after town meeting. I'm just throwing that out. I don't know, but it seems like
Well,
difficult to accomplish all that.
again, the time frame, we put a quick time frame in because it's fresh in everybody's mind of what happened in town meeting and to record it. And the gateway system is open to do that. What some communities find or do is wait until the very end. They're trying to pull the whole recap together and they can't get their town meeting information in. So by putting a quick time frame on it, you know, do it and be done is the theory here.
Okay.
You know, certainly if you don't want to do it within 2 weeks, within a month or whatever is a reasonable time frame.
What else is happening right after the town meeting? I mean, other than just wanting a break? Is there stuff that's going on with the behind the scenes that maybe we wouldn't be aware of for those offices?
Yes, every day at town hall is busy. There's a lot that happens every day. People are busy every day.
Right,
But just for
some day this has to be done though, right? So you say
Yes.
every day is busy. That's not an excuse not to do it.
I'm not making excuses. I'm just saying that people, yes. I mean, just for example, the AP warrants and the payroll warrant alone, takes the better part of a work week for our town accountant. So if that 2 weeks, well, one of those is gonna be a warrant week, and there's just not a lot of, in that department in particular, there is no slack. If someone's sick, if someone's kid is sick, I mean, there's any number of reasons.
We're pretty lean on staff.
Very lean on finance staff.
So I think ultimately the point was, as Marcus said.
Yeah, I mean, I think
set
a month.
Soon.
Yeah,
Make sure you get it done.
you know, and,
Yep.
yeah.
All right, can we make that 4 weeks?
Sure.
B?
What do you want to do?
Part B, where it says.
2 weeks.
2 weeks, make it 3 or 4, okay.
4 weeks is reasonable.
Okay. The only question I had was under year-end closing policy, accomplished no later than December 31st. And I realize there's a process. Got it. Could that be accomplished any sooner? And I'm not talking about I am not talking about a month sooner. I'm talking about like a week, 2 weeks. I don't know. That we typically have our town meeting before the 31st of October. So that's kind of what I was thinking. Would we have this? I mean, that should be done, I think, before we have our town meeting. But I don't know that that's really feasible, because if you look at the town meeting calendar, when we would have to post the warrant, I mean, it would have to be by, now that I'm talking about it, in order to really affect it, it would have to be by September 31st. That's not realistic.
Okay, yeah, and you're
So
combining a few things. Your main thing is getting the books closed and getting your free cash certified.
Yeah, so we should just, well,
Yeah, and the year end is more than that. It includes all of the Schedule A filings, for instance. And there's no reason to have Schedule A done for a town meeting. I mean,
certifying free cash would be.
Certifying free cash is you want to close the books and get your balance sheet and everything done. And I think on back here, those are listed for September 30th.
Okay, so it's fine then. Okay.
Can I ask what, in paragraph A, the second small paragraph, the town accountant, et cetera, I just don't know what that, I don't even know what that means.
Okay, and you have done it on your warrant. For special articles, if there's an account hanging out there that doesn't have the new sunset clause on it, and it's been dormant, town accountant just needs to review all of those special appropriation articles set up into special revenue accounts to see if they need to be closed out.
So what does to ensure that it does not serve as an unauthorized special revenue funding source?
So it doesn't.
How could you spend it for something else?
It happens all the time.
Really?
Oh, there's a bucket of money that nobody's touched it in 3 years. Oh, let's use that to buy the fire truck.
Oh, okay.
You know, that's the extreme.
Oh,
but,
no, we don't want that to happen.
But
no.
Exactly. So if they're dormant, you know, just an annual review, a quick review. Yep, we have it.
Try to
Close
do
it
that,
out.
but there's always ones that we miss.
Yeah. Yeah, I've seen that on your warrant. You're very good about doing that. Yes. But again, it's just a policy statement to make sure it happens.
Wow.
Yeah.
Amazing.
In a word.
I'm actually surprised we got through it that quick.
We don't want to cover the appendix?
Well, the appendix is the investment policy, so I have it. But
We're gonna remove your.
Great job, thank you, appreciate the time. So what's the next step with this now? Everyone wrote down a lot of comments.
Well, I will actually edit this to some degree. I'll mark it as an edited version and send it back to.
You can send that, so immediately forward it to us.
Yeah. And there was one, when we talked the other day, we talked about adding a credit card policy.
Yes.
Oh,
And
great.
so I will include that. It was, I'm looking for my notes, but I think I remember, one card in the custody of the treasurer and with a form and the requirements around the use of it.
That's how it was handled in my old job. If someone needed it, they would sign it out, they would return it with the receipts of any purchase they had made.
And that lines up with our best practice.
Yep.
Okay, so I will add that into the document.
Okay, good. So you will physically possess it then?
It would be the treasurer who would possess the card. Yeah.
Oh, okay.
But I would, I mean, if it's in a locked place, I would maybe have a key. She and I we're both signers on the bank accounts. We'd handle some redundancy in case she's out.
Okay. Okay, so you'll do that and then we'll.
I'll do that. I will do that.
What else?
That's all I have.
The finance, the forecast, did you want to talk about that? You're just gonna leave us a copy.
I'm gonna leave you a copy. Yeah, I'll give you some highlights of it.
Sorry, what was the forecast document? I just missed that description of what that actually is.
It's a 5-year forecast. The accompaniment to this is an Excel workbook that has all of the revenue and expenditures to present a forecast. And it was the second part of the community compact request.
One was financial policies, 2 was a 5-year forecast.
So I guess the only question I had after I reviewed this document is this: I didn't know how beneficial it'd be just to either look at a 2 or 3 year history just to see how our past spending practices haven't conformed to these policies, to see are we close to the mark, are we off in some areas?
There's some historical analysis in the forecast, I believe.
Oh, nice.
Right, Marcia, you have some historical analysis in your...
Yes. The paper is a little difficult, but if you go to the appendix, page 37, you can get a flavor for the workbook part of this. I started at fiscal 17 and went to fiscal 23, but especially in the revenue on the workbook, it goes back to, I think I started in fiscal 06. So you'll be able to see a lot of the history. On page 39, the revenue is just a revenue summary, but then on page 40, you'll see start to see the components of the revenue, of your levy activity, and you will see just about the pink line, the excess capacity for 17 and 18, that's the actual, and then projecting forward some excess capacity, recognizing that is a historical event, and I put it in just at 3%, just as a placeholder.
And all of these are, changeable by you. You'll get an Excel workbook, and if you want to alter any assumptions, you'll be able to do that, and it will follow through.
Do you have a PDF of this like you did with the financial policies?
Yeah, I will.
Great.
This was held up, our senior deputy commissioner, it was reviewing it, and I only got it this morning.
No worries.
So I wanted to bring it with me to drop it off. I knew you guys were anxious for it, but you'll get the email with everything tomorrow. Okay. But it goes on, the local receipts, your available funds. In this document, I did actually forecast free cash. That is something that we typically do not do in our forecasts.
Where's that, what page?
I'm just looking at page 43, and that's in the pink. And I apologize, I added a stabilization fund for it. Oh no, it's just a general stabilization fund. The school and the pension. I put in $1 million a year as a forecast free cash. Again, that's generally not done, but because of your history with free cash and how you always turn some over at the end of the year to feed the next year, I made that assumption. It goes on then to the expenditures in the broad categories of the expenditures, some enterprise, community preservation. It outlines your debt, and then I folded in the capital plan that you had spoken of. the text of this gives you a lot of the history. There's lots of charts, graphs. Actually, if you look on page 14, the free cash, the green on the bottom is what was left at the end of the fiscal year, and the blue was what is added on top of it. So it's very visual that you can see where your free cash.
Oh, that's interesting.
I guess in general, I mean, there's the general stabilization right there. I mean, it's right there in the green. Think about it.
Yes, yes, yes.
That's fine, another name.
So this document, as I said, goes through a lot of the history. It's of your revenue sources and your expenditures.
Okay. I can't wait to see this year's annual town meeting FinCom book.
So good.
Great, we're just as excited.
Were there any troubling metrics or policies you noticed when you were kind of reviewing the policy documents? Anything that just jumps out in your mind?
Not so much. As I've said a few times, West Newbury is very, very fortunate in having the levels of reserves that you have, generating the free cash and having the excess capacity. That's unusual. So that jumped out at me, but nothing troubling.
If this high school passes, we might spend some of our reserves a little, not.
And that's where
Kinda-
this
we're kinda
tool will come in to play, because you'll be able to plug that in. And actually, if you go to the beginning, I started at the end. Page 4 is the summary of all of the revenue and expenditure pieces, and started with 18, and that balances back to your recap. In 19, that is reflecting the actions of your Springtown meeting. And if you see on the general fund, the surplus shortfall for fiscal 19, what was left over, and I think Forbes, you had provided me a number, a summary page, and there was like $420,000 left over.
It might be from Andy, yeah.
Or from, okay. I put that into excess capacity just to make it balance to zero. But in using the revenue assumptions and expenditure assumptions, you can see over time what will happen. So if you layer in a capital project, the school project, you'll be able to see what it does to the bottom line. And on the bottom, you'll see a line that says COLA impact. In the personnel projections for expenditures, those are projected level funded. So if you're making $100 this fiscal year, it's in for $100 next fiscal year.
Okay.
Where it's handled is in the COLA table,
Okay.
where you can put in, if everybody in this department gets 2% or 3%, and then it pulls through, and that's what it does to the bottom line.
Okay.
So there's no guarantee of an increase, as we were talking earlier.
Right. Okay.
So that's how this is developed.
Excellent.
Okay?
It's exciting.
So you have a little bit more reading material now that you've made it through the policies.
Tonight.
But you said this is more comprehensive than
Well,
that?
I think there's more moving pieces in this.
Oh, there's definitely more moving pieces.
But one of the things that we talk about with the forecast, the actual spreadsheet piece of it, that really is the responsibility of a single person, that they own it, whether it's your town manager, your town accountant, or your FinCom, but somebody will manage that, because if there's multiple versions, then it's not really useful.
Angus owns it.
Okay. I can see.
I had one last comment, and it was on your letter about the finance department. I just wanted to, so I'm speaking for me, so you.
But I'm going to agree with him.
Okay.
You know.
I know what you're going to say.
Well, just a couple of comments. I mean, we're a small town. I don't know if this was communicated, but the treasurer collector and the town accountant, they've been in the same office for decades. That's not new that they're in the same office.
It's a new office.
It's
but
a new
it
office.
was the same situation in the old office.
Yeah, and I don't disagree with what you're saying, so I'm agreeing with that. But it's not a change that,
Well, but my understanding through my communications was there was more people in that office. It wasn't just the two of them.
you know, 3 of them.
So that mitigated the issue of the perception of your town accountant is sitting in there, a resident comes in to pay their taxes, the town accountant is sitting there, and the resident expects service,
Yep, no, I got it.
and
Yep.
the town accountant says, sorry, I can't help you.
Yep, no, they can't.
Exactly, and
There's no choice.
And the town accountant is actually protecting that resident by not providing the service, but it doesn't play well, and it's not understood. So when the third person was in there, there was an offset to that. But now that it's just the two of them, that was the concern expressed to me.
Okay.
Okay.
So, okay.
Okay, rather than it being an ethics situation, it's more a resident
Right, because-
service situation.
Right, because-
Okay, no, that's not the way I interpreted the letter.
No,
Okay.
I think you have very professional employees working there, and they know their roles, and they won't overstep, but at the same time, they want to be pleasant and servicing the public, and that's the contract,
I think
the
that-
conflict.
Well,
Okay.
the treasurer collector was on vacation last week, so I think the solution, I don't know if they liked it, but I thought it was a good solution. There was a sign on the door that, and I don't think it said she was on vacation, but go to across the hall and make your payment there. So, I mean, it's pretty simple. So one, not to pick at words, but it says, we understand that the previous assistant to the treasurer collector, so that person's Annie, and she's still, unless I am missing something, there were no finance responsibilities taking away from her. Her hours increased, so she could take on some additional resident service areas. So there was, to my knowledge, there wasn't supposed to be a change with that.
Oh.
Now, location, that's a different conversation.
Right, and I think that's where that was going, was just the location change.
But she was not okay.
Well, okay.
Okay. I mean, the reason we did that, and just so you know, so now I'm just editorializing, we had focus groups and we had surveys of our town, of our residents, and they very clearly and very loud, and this was through a professional market research person, very clearly and very loudly said we have to improve our communication. So that was the premise that we built the town manager's office around, surrounding him with, because we felt that if a resident comes in, where are they going to go? Says town manager, I'm going to go there. Mm-hmm. And we don't want him standing at a window. I know he wouldn't do it anyway, but we want to provide the service and be responsive to people that come in, but also knowing that's not a full-time job to do that. So that's why we did that. Now, maybe we could look at other alternatives, I don't know. Whatever, that's a different conversation. And our former assistant, you know, we gave her the responsibility of outbound communication, if you will, and that's still kind of a work in progress. But that was a big thing, so that's why we built that office that way. That was all.
Okay.
I mean, we can figure out the finance.
No, and I understand you're putting your residents first, which
Right.
is,
But, you know, maybe there's something we can change in the finance, I don't know.
I think, just briefly, some of the workflow issues of, the accountant has a tremendous amount, and so she's looking to delegate, and with someone across the hall, it's just, it's a challenge, on workflow.
Yeah.
And,
We'll figure it out. So, thank you.
I want to thank you so much. Like, I didn't expect it to be specific to our, the document was so much better than I expected, so I just thought you should know that. Thank you.
I'm glad you feel that way.
Thank
It was a pleasure doing it, and it was great fun to work with you guys, and I guess we'll be back.
Thank you, Theo. Thank you, Marcia.
You're welcome.
Thank you very much.
Cool.
I move to adjourn.
Second.
All in favor? Aye.
Aye.